So chapter number 4, already we have discussed with unit 2, determination of price. So unit 1 is market, unit 2 is determination of price, unit 3 is types of market. So unit 2 is already done, 1 and 3 is pending. So unit number 1, market. So what is the meaning of market? Already we have discussed, I know what mistakes you people will do. Market is a place where buyers and sellers come together to exchange goods and services. Your standard dialogue, I know that. This is what even you guys have answered in your normal class. But the very basic word what you said, market is a place, that is wrong. Market is not always a place. Market is an arrangement or a situation where buyers and sellers will contact. Either it can be a direct contact or indirect contact in order to exchange goods and services for a or consideration, something in return. That is where the last 2 points, this you will forget, and exchange of goods and services. That line has to be included. For what purpose? For a value or consideration. So market always need not be a physical place. Market need not be a. So this is the meaning of market. And when we speak about characteristic features of market, there are two groups, buyer and contact, direct contact or indirect contact. There should be a good or a services, that means a product. It has to be exchanged for a value or consideration. Upon all of this, there should be a willingness as well as ability to buy and sell. These are the characteristic features. So in this chapter, there are various types of market, but we don't discuss. In this entire chapter, we are interested to discuss market based on competition. Market based on. So market based on competition is categorized into two types, perfect competition and imperfect competition. Under perfect, there is only one single type, pure competition. Under imperfect, there are 6 types. But in your syllabus, we only discuss about monopoly and oligopoly. What does the word poly refers to? Poly refers to seller. Mono means single. Oli means few. Poly means seller. Single seller and few sellers. Last but not the least, there is one more combination which is a combined form of perfect competition and monopoly. That is a third type, that is monopolistic competition. So in this entire chapter, we are interested to learn market based on competition. Market based on competition is classified into two types. Number 1, perfect competition. Number 2, imperfect competition. Under perfect competition, we have pure competition. Under imperfect competition, monopoly and oligopoly. Under third category, that is a combination of perfect and monopoly. Perfect and let us get started with perfect competition. The very first one, that is the main base of the chapter. Clear? So now I'm doing it together. I'm not doing unit 1 separate and unit 3 separate. We are going to do it together. So this is the one of the market. They say there is no defects at all. There is completely perfection. There is completely highly impossible. They said this is the most idealistic market which is free from all kinds of defects. So this concept is myth, unrealistic. These kind of market is only studied in a theoretical base. In real world, there is no country purely following perfect competition market. Why did I say so? Remember this. Point number 1, existence of large number of buyers and sellers. Existence of large number of, that means there are large number of buyers as well as large number of. So what's wrong in it? Every market has got large number of buyers and large number of sellers. But the point number 2 is the biggest myth. Manufacturer is only a price, not a price. As a manufacturer, you do not have an authority to decide your own product's selling price. Then who will decide it? Market forces. That is nothing but price. Demand and supply will decide the selling price of a commodity. This is why I said this is unrealistic. As a manufacturer, you don't have an authority to decide your own product's selling price. Point number 3, uniform pricing throughout the market. Entire economy will be having same pricing wherever you go and buy the product in the economy. Assuming if India is following perfect competition. You buy a product in Bangalore, same price. Mumbai, same price. Delhi, same price. Kolkata, same price. Jammu, Kashmir, same price. Highly impossible. Uniform pricing cannot happen. But I already discussed market equilibrium. When total demand is equals to price remains constant. So uniform pricing is possible only when the entire industry is in equilibrium. Point number 4, all the manufacturers are selling homogeneous goods and services. Either you buy from X, Y, Z or any person, everyone is producing same kind of goods and services. That is homogeneous or identical goods and services. If they are identical, then it is called as perfect substitutes. So what is point number 1? Existence of large number of buyers and sellers. Point number 2, manufacturer is only a price, not a price. There is a uniform pricing throughout the market, homogeneous goods and services. Now the concept remains same. Instead of utility, cost, product, now we are calling it as revenue. TR is also called as outlay, price into quantity. Average revenue, AR will be TR by quantity. MR has got two different formula, output continuous, output not continuous. Here you need to be very careful, output is not continuous. So MR formula will be MR is equals to change in TR by, so this will be like 10, 20, 30, 40, 50. Clear? Price into quantity. Any doubts? Next, have a look over there. AR 5. That is nothing but 10 by 2. Next 20 by 4. 5, 5, 5, 5. Any doubts? Next MR. Change in quantity. 2 is there. Previous unit is 1. We don't have information. What is the previous of even 1? 0. When we don't produce anything, when we don't sell anything, will there be any total revenue? 0. So difference between 10 and 0. 10. Difference between 2 and 0. 2. 10 by 2. Same thing happens. 20 and 10 difference is 10. 4 and 2 difference is 2. 10 by 2. 5, 5, 5, 5. That means price, AR, MR, all the three are same. So in case of perfect competition market, P equals AR equals. This is how the graph looks like. This is y-axis, this is x-axis, and it is parallel to x-axis. P equals AR equals MR. Clear? And point number 5 says free entry and free exit of firm into industry. A firm can enter or firm can exit as per their will and wish. A firm is going to enter when there is a profits. When there is a, and profits is also of two types. How many types? Two types. Number 1, super normal profit. Second one, normal profit. So supernormal condition is AR is greater than AC. Normal profit condition is AR is equal to, and already in shutdown point we have discussed loss. Loss condition is average revenue is lesser than average cost. So a firm will enter when there is a supernormal profit or normal profit. A firm will exit when there is a losses. Clear? And buyers and sellers have complete knowledge about the market. Anyhow, everyone is producing same kind of goods. Uniform pricing throughout the market. Do we need any advertisement for this? Definitely no. So when every person has got a complete knowledge about the market, henceforth there is no advertisement expenditure in perfect competition market. Not just advertisement expenditure, even there is no transportation cost. As a manufacturer, you are only a price taker, not a price. Even though if you incur transportation cost, you can't charge it to the customers because you are only a price taker, not a price. Last but not the least, perfect mobility of factors of production. That means all land, labor, capital and organization can be shifted from one person to another person. There is a perfect mobility. So these are the 8 characteristic features of perfect competition market. Point number 1, large number of buyers and large number of manufacturer is only a price taker, not a price maker. Uniform pricing throughout the market. That is possible only when total demand is equals to total supply. Point number 4, homogeneous goods and services. Next, point number 5, free entry and free exit of firms into industry. When will a firm enter? When there is a supernormal profit or normal profit. When there is a losses, firm will exit. Buyers and sellers have complete knowledge about the market. Henceforth, there is no advertisement and there is no transportation cost. Remember, advertisement and transportation. What is it? And transportation put together is called as carrying cost. What is it? Or selling cost. Carrying cost or? Remember, if first 5 points are satisfied, that means large number of buyers and sellers, manufacturer price taker, uniform pricing, homogeneous goods, free entry and free exit, then it is called as pure competition. If all the 8 points are satisfied, then it is called as perfect competition. Clear? And remember, in India, agricultural goods are pure competition. Farmer will not decide the selling price. Demand and supply will decide the selling price. Large number of buyers and large number of sellers. Uniform pricing will be there for the same carrot tomato in the region, and homogeneous goods and services. Free entry and free exit. Any farmer can enter the market, they can also exit the market. Agricultural sector and stock markets are the example for pure competition. Clear? So these are the characteristic features of what? Pure competition. Now let us enter to the most important discussion, that is equilibrium of firm. What is it? Already we have discussed equilibrium of industry. Total demand equals total supply. That is for the entire industry. What if one firm has to be in equilibrium? The condition is MC should be equal to MR. What is the condition? MC should be equal to, and MC has to cut MR from, not from, above. If you remember in chapter 3, I said MC curve is U in shape. MC curve is U in shape. And I didn't explain much about it. I said in chapter 4, I will say we will only consider second part of the graph. We don't consider first part of the graph. So MC curve will become J in shape. That is what I explained. This is the explanation. See there. What is condition for firm equilibrium? MC should become equal to MR. Observe, in two cases, MC and MR are equal in a lifetime of a firm. Initially, when they start producing, initially only they are in equilibrium at point X. Even at point Y, we don't consider point X, we only consider point Y. For the very reason, observe, manufacturer is only a price taker. Price is uniform throughout the market. Already we discussed P, AR and MR, all the three are equal. And when we started to produce, say when I'm producing 50 units of furniture, I'm in equilibrium. Till date, from the first unit until 49th unit, I have only incurred losses. Cost is greater, revenue is lesser. Cost is greater, revenue is lesser. Now if I produce beyond 50, slowly I will start making profits. Especially say when I'm producing a 300 level of output, cost is minimum so that I will earn maximum profit for every extra unit I sell. But there are large number of buyers. I can't stop myself at producing at 300. Still we produce, no doubt my profit ratio starts decreasing because cost starts increasing. Until when? Until point Y. At point Y, say when I'm producing 500 units, again we are in equilibrium. No profit or no loss. Suppose if we produce even one extra unit beyond 500, one extra unit beyond, again we will start incurring losses. So initially I was only incurring losses, then I became at equilibrium. Now if I stop producing, in a lifetime I have never seen a profit. So I don't consider point X. We consider point Y as a equilibrium. Henceforth, we only consider second part of the graph. We don't consider first part of the graph. That's the reason MC is cutting MR from below, not from above. If it is cutting from above, we will increase our output. We will increase our. Suppose if it is cutting from below, then we should decrease our output. That is the maximum lifetime of a firm which can produce. Beyond which if it produces, it starts incurring losses. So what are the conditions of equilibrium? Condition number 1, MC should be equal to MR, and MC has to cut MR from below, not from. What happens if it is cutting from above? That is not equilibrium. We should increase our output. If it is cutting from below, that is our equilibrium, and we should decrease our output to stay back in the profit zone, to stay back in the clear. Now the question can also be asked from MC-MR point of view. Suppose, listen to this carefully. If MC is greater than MR, that is point C is greater, point D is lesser. Cost is greater, revenue is lesser. So what should happen? Output should decrease. Decrease. Cost is greater now. Suppose if MC is lesser, MR is greater. That is point A is MR. Point B is MC. That means output should increase. What if MC is equal to MR? This is where we should consider MC. If MC is cutting from above, if MC is cutting from, output should increase. If MC is cutting from below, output should decrease. Clear? This is what we call it as firm equilibrium. We only consider second part of the graph. Henceforth, from now on, MC curve will be dash shape, J shape. It will not be U-shaped curve. Clear? So this is what the firm equilibrium is. See there, if MC and MR both are equal, we consider from where MC is cutting. If MC is cutting from above, output should increase. If MC is cutting from below, output should decrease. If MC is greater than MR, that means MR is lesser or MC is greater. Like this, anything can be twister question. If MR is greater than MC, revenue greater, cost lesser, output increase. MR is lesser, MC is greater, cost is greater, revenue lesser, output should decrease. Clear? Now let us understand about the price determination in short run. Suppose a firm is operating in perfect competition market and our intention itself is to operate only less than a year. Less than a year. I know that I will not operate more than a year. So either a firm can incur supernormal profit, normal profit or loss. Supernormal profit or loss. Condition for supernormal profit is AR greater than AC. Condition for loss is AR lesser than AC. Condition of normal profit is AR. Especially this normal profit is most important. Normal profit is, already we have explained the graph in detail in the class. So that graphs will never be there. They will ask you to identify the right graph, max to max if it comes. But in case of normal profit, AR and AC both are equal. Now how to plot this graph? Already I explained. First x-axis, y-axis. Next P equals AR equals MR. Next we should plot the firm equilibrium. MC should cut MR from below and MC cuts MR from below. That is the point of equilibrium. Now even at the point of equilibrium, AC curve is also equal because AC and AR are equal. AR and MR both are same. Now AC curve is U in shape. AC curve is, one second. AC curve is U in shape. At the point of equilibrium, observe, all the four curves are equal. All the four curves are. Observe this very carefully. MC, AC, AR, MR. So if a firm should be in equilibrium, when they are operating in short run in perfect competition market, then the condition of equilibrium is P equals AR equals MR equals AC equals MC. This is the condition of firm equilibrium under normal profit condition in short run. Same to same applies even in long run. In case of a long run, firm will incur only and only, even though if there is a chances to gain supernormal profit, none of the firm will do so. Why? If any one does that, everyone else will do the same. But in reality, is there any competition existing in perfect competition? That is a myth. There is no competition at all. So in long run, each and every manufacturer incurs only and only. That means what? Same graph everywhere, L as a prefix. Long run marginal cost, long run average cost, long run average revenue, long run marginal revenue. That means the condition of equilibrium will be price equals LAR equals LMR equals LAC equals LMC. This is the condition of equilibrium under long run. Clear? So this is what is perfect competition market. This is where the firm equilibrium in case of long run. If the entire industry has to be in equilibrium, then total demand should be equals to, in such a case, price remains constant. Clear? Understood? So these are the concepts of perfect competition market. So the next one is monopoly. What do you mean by monopoly? Single seller in the entire nation, but there are large number of buyers. So single seller in the economy, large number of. So if you are the only seller, will you decide the price or demand and supply will decide? You will decide the price. So we are a price makers. When you are making the prices, would you like to make profit or loss? Which kind of profit? Supernormal profit or normal profit? So a monopolist will always and always enjoy supernormal profit, and you are the only seller, so there is no close. And not just that, there is also an entry barrier. What is there? No new firm is allowed to start a same kind of a business or a similar kind of a business. There is a complete restriction. Even such restriction is of 4 types. Number 1, the law of a nation itself is restricting. No one can do this except so and so. Best example in India, atomic energy generation. RBI. Only RBI can print the currency notes in the banking system. No other banks. Next. Climatic condition itself is acting as a barrier. Can we grow apples in Bangalore? Highly impossible. Like this, climatic conditions of different state is acting as a barrier. Third one, business formation. Initially, there will be a competition. Such competing people itself will become an organization or maybe an association. And only such association people called as cartel. Only such association or organization can operate. Best example, your local fruit market and vegetable market. Same, some 5-6 set of people are selling from 10-15 years. They will not allow any new one to come and sell there. Only among themselves there is a competition. They have created Malleshwaram Fruit Sellers Association. Only they will sell. They will not allow any other person. Such association is called as what? Cartel. Last but not the least, investment factor. Even though if government has given a permission, best example, Indian Railway. Now they are open for privatization. No one is coming forward to buy the Indian Railway because of its huge losses every year. Even though if they are allowing, investment becomes a challenging task. Whatever government has invested from past 75 years or 200 years, even under British rule, such a huge investment cannot be made at the present moment by any one private organization. That is another biggest challenging task. So these are the 4 kinds of entry barrier: legal entry barrier, natural entry barrier, business formation, and investment factors. Clear? And the most important point amongst all is price. Charging different prices from different for the same goods in. Best example, your local vegetable vendors. Go by walk, 50 rupee per kg tomato. Go by motor vehicle, 80 rupee per kg. Get down by car, 100 rupee per kg. So charging different prices from different customers. Leave about that, your bus pass. When I was a student, the category was based on male and female bus pass rates. So now even more, one step beyond. SC, ST, general merit, based on that. So same services. We are charging different prices from different customers. So that is what is called as price discrimination. There are 4 types. Number 1, personal price discrimination. Suppose if I have a cloth shop, suppose if my student comes, 10% discount, regular customer comes, 20% discount, if my relative comes, 20% premium, extra charges. It's my wish. Personal price discrimination. Second one, based on geographical price discrimination. I have 2 shops, one in North India, one in South India. North India high price, South India less price, my wish. So based on dividing the market into different segments. Third one, price discrimination according to use, based on the usage. Suppose if a person comes and asks for a white shirt, for what purpose? Sir, driving the cab. Okay, 100 rupees, take it. Second time, other person comes, for what purpose? Diwali puja, no, I need to go to office in the white shirt. 500 rupees, same shirt, give it to a school fellow. Different use. Next one, price discrimination according to time. Raincoat, best example. During the winter season you won't purchase, but during the rainy season definitely you will purchase. Prices are high. Summer, who will purchase raincoat? Prices are extremely low. So according to time, even price will be discriminated. So what is price discrimination? Charging different prices from different customers for the same type of goods. And so 4 types are there. Likewise, same 3 degrees of price discrimination. First degree price discrimination based on consumer surplus. I will try to extract as much as possible from the customer. That is called as first degree. I know that you will bargain. I will try to extract as much as possible. Second degree is based on volume of transaction. If I buy more and more volumes, prices will be less. If I buy less volumes, usually prices are more. Third degree, based on dividing the markets into sub-markets. Same, geographical discrimination. So these are the characteristic features of monopoly. Characteristic features of monopoly. Clear? Understood? Now let us enter to the most important topic of monopoly, that is revenue curve under monopoly. See there, we are the only sellers in the market. I am discriminating the price. Say I am reducing the price. When price decreases, quantity demanded will increase. We need to identify total revenue, average revenue, and marginal revenue. Observe it very carefully. Total revenue, see there, 20 into 1, 20, 18 into 2, 36, 16 into 3, 48, 14 into 4, 56, 12 into 5, 60. Like this, by solving it by using the specific formulas. Now those are the values that we have got. Observe, 20 it will become 60. Again from 60 it will go back to 20. So TR curve will be like inverted U. It will increase, it will reach maximum, it will start decreasing. AR curve, observe very carefully. AR curve 20, 18 like this, it keeps on decreasing. And if you observe, price and AR both are same. Both are. In perfect competition market, P, AR, MR, all the 3 were equal, but that was unrealistic, myth. But here it is realistic, monopoly. So average revenue is also called as selling price. What is it called as? And in demand concept also we studied, I know you don't remember. AR is also called as demand curve. AR is also called as what? So remember, AR curve is also called as demand curve. Henceforth, AR curve will never become 0. And moreover, it is also a selling price. Selling price can never be 0. Observe, AR from 20 it is decreasing to 18. 18 it is decreasing to 16. Difference is 2 units. Here, 20 to 16. Differences 16 to 12 differences. Observe like this. AR decreases in 2 units. MR decreases in. Can I say MR decreases double than AR? So MR curve is going to decrease double than AR. And moreover, whenever TR is maximum, TR is MR is. Same logic we are seeing right from LDMU concept. LDMU also happens same. When TU is maximum, MU is 0. Law of variable proportion. When TP is maximum, MP is 0. In our car example. Now when TR is maximum, MR will be 0. Clear? So this is how the particular table is. Now let us understand a graphical representation of this table. That is what is most important. Can you observe here? Now this is the most important graph. Observe. What did I say? TR will increase. TR will become maximum and then TR starts decreasing. But AR curve is also called as selling price and also demand curve. It keeps on decreasing. It will never become 0. But MR curve used to become 0 and it was also reaching negative. Have a look here. 0, -4, -8. Like this, it will not just become 0. It will also become negative. So when we are plotting the graph, this is how the graph looks like. AR curve will be flatter. AR curve will be. MR curve is going to be steeper. So AR curve is flatter, MR curve is steeper. AR curve is also called as demand curve. Already in point method we have discussed. Middle point of the demand curve is always unitary elastic. Upper portion is relatively elastic. The point which touches y-axis is perfectly elastic. Lower portion is relatively inelastic. So logic is very simple here. I will explain all the three together. So kindly remember this and also concentrate. Whenever TR is increasing, when TR is, AR is greater than 1, demand is greater than 1 and MR is decreasing but still positive, but still simple. Whenever total revenue is increasing, total revenue is E will be greater than 1 and MR will be decreasing. MR will be, and it is still, when E becomes equal to 1, MR will be 0. MR will be, and TR is maximum. So whenever E becomes equal to 1, TR will be maximum, MR will be. Next, when E is lesser than 1, E is, MR is negative, MR is, and TR will be decreasing. Till now we understood only the relationship between TU, MU, TP, MP, but now relationship of all the three are important. AR, MR, TR. And remember, till now there was only two formulas for MR, or marginal concept had two formula, when output is continuous and when output is not continuous. Now we have a third formula. Now we have a MR is equals to AR E minus 1 divided by E. This is the third formula. Sir, when should we use this third formula? Remember, when the information is given about selling price, that is nothing but average revenue, and information is also given about what? Two things. E, that is average revenue. AR is also called as selling price. So it is not or, it is and. What is it? When the information is given about selling price and average revenue. Selling prices and average revenue. When both the informations are given, we should use which formula? MR. MR is equals to AR E minus 1 by E. For example, if selling price of a product is rupees 20, if E is 1.2, or if E is equal to 1, if E is equal to 0.6. Now do the smart work. Listen to me very carefully. What did I said? Observe this. This is most important. Whenever E is equal to 1, whenever E is, MR is. Whenever E is lesser than 1, MR is. Suppose let us calculate it. First let us calculate for E equals 1. Suppose AR is 20, ER is 1 minus 1 divided by 1. 1 minus 1 is 0 by any numerical is. So MR is 0. Smart work has to be done. If you know the graph, then you need not to solve it. If E is equal to 1, MR will be. If E is lesser than 1, 0.6, then answer will be definitely negative. So see here, 20 into 0.6 minus 1 divided by 0.6 minus 1 is minus 0.4. Minus 0.4 divided by 0.6 into 20, values will be definitely negative. That is minus 1.3333 recurring. Like this. Only and only if E is greater than 1. If E is, then MR will be in positive value. MR will be in. So you need not to solve it. If you know the logic very well, then straight away you can mark the answers. So there is a third formula to calculate MR also. Such third formula will be useful only when the information is given about selling price and elasticity. Selling price and elasticity. That's nothing but AR. AR curve is also called as demand curve. That is nothing but elasticity. Observe this. If E is equal to 1, the middle portion, MR will be 0 and TR will be maximum. Already we discussed. When TR is maximum, when TR is, MR was exactly 0. It was cutting the x-axis. MR was 0. And AR will be what? AR will be 1. Next, if E is greater than 1, MR will be TR is. Next, when TR is decreasing, that is nothing but MR is negative and E will be lesser than 1. That is what even I explained. Clear? So this is the revenue curve in monopoly. Here two things has to be remembered. AR curve is flatter, MR curve is. Especially the one important area is whenever E is equal to 1. When E is, MR is, TR is. That is where most of the time questions have come. Clear? So let's go to the next topic. So suppose if at all you are operating in a monopoly, you are the only seller. Your intention is also to operate only in short term. Intention is only to operate in, you are the price maker. You want to make a supernormal profit. Suppose if the product is sold, supernormal profit. If people don't accept your commodity, so in short run only two possibilities are there. Supernormal profit or losses. And graph. This is how. Usually graph will never come in the exam. Only sometimes rare chances select the right graph. But you should also know how to prepare the graph. Clear? Now, in case of long run, in case of only and only supernormal profit, because you are the only seller. If people are accepting your commodity, you will end up getting only and only supernormal profit. Clear? That brings us to the most important topic of the chapter, that is price discrimination. Already a part of it I have discussed. Here the main crux of the story has to be discussed. What is this? Charging different prices from different customers for the same kind of goods and services. That is called as price discrimination. So in case of price discrimination, in order to follow that, there are four essential conditions. How many essential conditions? Condition number 1, there should be an existence of monopoly power. There should be existence of, you should be a monopoly power. Second one, you should be able to separate the market into two different markets. Next, different elasticities in different market. Different types of elasticities in different. One market can be relatively elastic, another market will be relatively inelastic, and no possibilities of resell. From place where prices are less, no one should come and buy that and go to the place where prices are more and sell it. You should be the only seller. You should be the. So these are the four essential conditions to be following as a price discrimination, and they have given a numerical problem here. See there, and also solve it. This is most important. Suppose a single monopolist sells a commodity for rupees 30. That is nothing but selling price AR, and the elasticity of market A and B are 2 and 5. Market A elasticity is 2. Market B elasticity is, see there, different elasticity. Market A less elastic. Market B more elastic. Now we have to identify the MR. We have to identify the MR. So MR of market A they have identified. See here, E minus 1 by E into AR. AR is 30 selling price. E is 2 market A. 2 minus 1 is 1. 1 by 2 is half. Half into 30 is, what does it mean? If you sell one more extra unit in market A, we end up getting a revenue of rupees 15. Okay, let us also identify the MR for market B. What is AR? 30 into 5 minus 1 divided by 5 minus 1 is 4. 4 by 5 into 30 is 20. So marginal revenue of market B is 24. What does it mean? If you sell one extra unit in market B, we end up getting 24 rupee. In market A, in which market I should sell now? Market B, I will get 9 rupees in excess than market A. 24 minus 15, 9 rupees. So what we will do? I am not interested to sell more units in market A. I am interested to sell more units in. So I will shift my supply. I will supply from market A to. So what happens when you're shifting the supply? In market B, supply is more, but there is no much demand in market B like that. Your demand is comparatively lesser than supply. So this condition is called as what? Excess supply. What is it? Excess. When there is excess supply, what will happen to price? Price will decrease. So in market B, prices will decrease. Now you are supplying more and more to market B. In market A, what will happen to supply? Supply is, but demand is. This is the concept of excess. When there is excess demand, what will happen to price? Now listen to this very carefully. In market A, we are increasing the price. In market B, we are decreasing the price. What was the elasticity of market A? That means less elastic comparatively to market B. In market where there is less elastic, we will increase the price. In market where there is more elastic, we will. This is the logic. This is what is price discrimination. In the market where there is more elastic, in the market where there is market B, we are going to decrease the price. In the market where there is less elastic, we will increase the price. Because of this, what will happen? Now marginal revenues will change because of change in price. Say after discriminating price, say marginal revenue of market A will become 20 rupee. Even because of decrease in price, this marginal revenue of market B will also become rupees. That means after price discrimination, after MR of both the market became equal. That is, MR of market A becomes equal to MR of. That means now if you shift your supply, nowhere you will be profitable. You will still get the same revenue. This is what is the concept of price discrimination. Two things to be remembered here. In which market we will increase the price? Where the elasticity is less. In which market we will increase the price? Same question I'm asking multiple times. Only instant think ಮಾಡ್ತಾವ್ರೆ. So in which market we will decrease the price? Where elasticity is more. It is inversely related there. More elasticity, lesser price. Lesser elasticity, after discriminating price, MR of both the market will become equal. Clear? That is what was represented in the form of graph like this. Now this is the comparison bar. MC cutting MR from below, equilibrium level. See there. Market A, elasticity was 2. Market B, elasticity was, that means it is less elastic. E is lesser than 1. Here more elastic. E is greater than 1, relatively elastic. Nature of demand curve. Here steeper. This is the comparison line of equilibrium. See there, in market A, more prices. Market B, less prices. Market A, less elastic. Prices have been increased. Market B, more elastic. Prices are decreasing. In market A, we are charging more price. Market B, we are charging less price because of steeper and flatter. That means because of different elasticity. Because of which are those different elasticity? E greater than 1 and E lesser than 1. When we are combining together, there is a bend. There is a kink. What is this called as? So that is the reason why we call it as dash demand curve. What is the reason for this kinked demand curve? Price discrimination. That is because of price discrimination. So the kinked demand curve is dash to the origin, convex to the origin because of combination of relatively elastic and relatively Inelastic. See, this lower portion is E greater than 1, upper portion is E lesser than 1. Because of combination of relatively elastic and relatively inelastic, there is a kink demand curve. After kink demand curve, after discriminating price, MR of both the markets will become equal. This is the concept of price discrimination. By this, monopoly comes to an end. So, the clear cut conclusion is higher prices will be charged in a market where there is lower elasticity. Lower prices will be charged in a market where there is higher elasticity. After discriminating price, MR of both the markets will become. And because of these discrimination, we have a kinked demand curve. Such kinked demand curve is due to price discrimination, which is dash to the origin, convex to the origin. After price discrimination, MR of both the markets will become equal. Clear? So the next topic is oligopoly. What do you mean by oli? Oli means few. There are few sellers in the entire economy. There are few sellers but large number of. And as the numbers are few, almost every strategy, every kind of a product are mostly interdependent with each other. Complete close interdependent. One will say our, let me say, detergent will wash, or let me say, clean off in a very first wash. Another one will say we'll get the dirt from entire India and then we will bake it, and even if you wash it will go in a very first wash. Another one will say Tide, one line will come, full pure white, vanish, Tide, like this. So there is something called as price rigidity, like how price discrimination was existing in monopoly. In oligopoly we have price rigidity. As the numbers are few, if anyone decreases the prices, definitely others will also. But if anyone increases price, others will think before increasing. No one will compete with respect to price. Oh, he increased, I should also increase. No. But if anyone decreases, others will definitely decrease the price. And last but not the least, existence of. Exactly, we have advertisement and transportation cost, and that was to be borne by a seller and it will be passed on to a buyer. And see there, types of oligopoly: pure oligopoly and differentiated. Pure means as the numbers are few, everyone are selling same type of goods and services. Cement industry, there you don't have flavors, lime flavor, raw, fragrance and all, nothing. Cement is completely same, white cement, normal cement, cement only, homogeneous goods. Next, differentiated oligopoly: toothpaste, one has salt, another one has pudina, chakke, lavanga. Differentiated, they are not one and the same. Open oligopoly and closed. Entry of new firm not restricted, open, restricted, closed. Collusive and competitive. This is important. As there are few sellers, everyone will decide one common selling price. Best example, gold sellers. 1 gram gold remains same. Petrol prices, 1 liter petrol price remains same. So all the producers comes under one roof and determines the common selling price. Competitive, I am not ready to sell at a common selling price. Like Shell petrol bunk, rascal fellow, everyone sell at same 1 liter petrol at 100 rupees, 102 rupees. I will sell 107 rupees. Like this, differentiated. Next, partial oligopoly and full oligopoly. In case of partial oligopoly, there is a price leader. Price. Only when this price leader changes the price, others will also change. Even today, to be frank, Tata Iron and Steel. If they change prices, all your Monkey Steel, Meenakshi Steel, 555 Steel, everyone will change. Either they will increase or decrease. If Tata don't changes, others will not change. Now today, best example, Jio. If Jio changes the prices, other telecom network will also change. So they are considered to be as a price leader who fix the price. Others will follow the similar pricing strategy. Either it can be more or either it can be less. Full oligopoly. No price leader existing. We are completely deciding our own commodity. See, there is no price leader existing and all the producers fix their own selling price. Last but syndicate and organized oligopoly. This is like a match fixing. Syndicate. That means everyone sells through the common syndicate. Every manufacturer is selling the commodity through a one single person. He is a distributor. That is called a syndicate oligopoly. See there. It refers to a situation where firm sells their product through a centralized syndicate. Last but not the least, organized. You sell in Karnataka, I will sell in Maharashtra, she will sell in Tamil Nadu, she will sell in Andhra Pradesh. You sell so much, I will sell so much. That is your price, that is my price. You come to my area, you only sell for same price. Only this much portion I will give the market to you. You have to do that. Complete match fixing. We are only deciding ourselves. Like what? Fixing the price, quotas. See there. Firm organizes themselves into a central association in order to fix the price, output and quotas. This is called as organized oligopoly. So these are the 5 types of oligopoly. What is oligopoly? Few sellers, large number of. Here the most important point is price rigidity. So because of price rigidity, even in oligopoly there is a kinked demand curve due to the combination of relatively elastic and relatively. The differences in monopoly, it was convex to the origin, but now it is concave to the origin. What is the reason for a oligopoly kinked demand curve? That is because of price rigidity. Clear? So this is the concept of oligopoly. Any doubts? So this brings us to the last topic of chapter 4, that is monopolistic competition market, where it is a combination of monopoly and perfect competition. Whatever characteristic features just now we are discussing, already we have done it. Just a pointer I have to say. But whatever market we are witnessing in the real world today, that is monopolistic competition market. How? There are large number of buyers and large number of. Definitely, but as a seller, you are not only the person, you have to compete with others. For that, you have complete liberty. You have complete. Bring out any number of changes in your commodity, bring out any kind of inventions and innovation, but you have to attract your customers. You have to attract your. See there, a manufacturer will have to have a complete control over the product, but the manufacturer will not only the person, instead he has to compete with others in order to sell his product. They have complete control to make any number of changes and modifications in their product. They have to compete with others. So large number of buyers and large number of free entry and when do they enter? Supernormal profit and normal profit. When will they exit? Product. They will say, I am best, I am superior. Only I can give you this bright, white, shining, all detergents. None of my competitors will give it. If you use my toothpaste, your teeth will become white, full. Even if you don't want to turn on your lights, go and at the evening time, do Center Fresh. You will get a light. See, that's the very beauty of my product. None of my competitor will give. I am differentiating my product from my competitor's product and existence of. And there is something called as, Ma, will you take bath? Head bath. Which shampoo? Suppose she wanted to buy that XYZ brand. She will go to the shop and she will ask. Now, the shopkeeper will say, no, this Dove shampoo is not there. He has XYZ brand. Will you buy any other brand? Definitely no. She will go to some other shop and she will buy the same product what she wanted. That is what is brand loyalty. Such brand loyalty we can see only in case of monopolistic competition market. There is an existence of what? There is an existence of brand loyalty. So these are the characteristic features of monopolistic competition market. As I said, it is a combination of monopoly and perfect competition. If at all we have an intention to operate only for short run, less than a year, then definitely I would like to make a supernormal profit. If people accept my commodity, if they don't accept it, that is what will happen in case of monopolistic competition. Now comes the most important and the last topic of the entire chapter, that is a firm in monopolistic competition can operate only and only if they maintain a buffer. What is this buffer stock? Excess capacity left out. What is it? Excess capacity. I have a capacity of producing 1000 furnitures in a month, but I'm only producing 800 furniture. Why? What if any strong competitor enters the market like Jio? If he sells at a lesser price than my commodities price, at that point of time, I will use this excess capacity. This Q to Q1 is a buffer stock left out. Observe, my marginal concept should be always 0. It should be always, but at present I'm operating at Q level, where my marginal concept is not 0. And moreover, average cost, AC, is not operated at minimum. It is not operated at, I am operating less than minimum. That is at point A. At point, typically speaking, this point A is a normal profit condition. AR is equal to AC. Only when any strong competitor enters the market, I will use this buffer stock left out. I will produce my excess capacity. Then my cost will decrease from point A to point B. When my cost is decreasing, then I will reduce my selling price. So I will decrease my selling price from P to P1. Now that means my selling price is at point C, cost is at point P. Technically speaking, this is the condition of loss. What is it? Condition of. Now have a look over there. Point B is cost. Point C is revenue. My cost is greater than revenue. Yes, no doubt I'm incurring losses. My intention is not to make profit now. A strong competitor has entered a market. My intention is survival. My intention is, so till this date I have made a profit. Now I need to attract my customers. I know that when prices are decreasing more and more, demand will. In order to take this advantage, I will reduce my selling price below the cost because a strong competitor has entered a market. So in short, a firm is said to be in equilibrium. These statements are very important. Listen to this carefully. A firm is said to be in equilibrium in monopolistic competition during a long run only and only if they maintain buffer stock. That is excess capacity left out. In short, they are operating at normal profit level. AR is equal to AC. See the conclusion. If any strong competitor enters the market, we utilize the buffer stock so that my cost of production reduces. Henceforth, we can also reduce the. When prices are decreasing, demand will. That is what I'm taking the advantage. So a firm is said to be in equilibrium during the long run only if they maintain the excess capacity. That is nothing but. And this is what the explanation. Just now I said, no doubt my cost is decreasing faster from point A to point B, but my revenue is decreasing to point A to point C. No doubt now I am not intended to make a profit. My intention is a survival. Intention is a. So in short, a firm is in equilibrium during long run only if they have a buffer stock. Only if they have a. By this, even monopolistic competition comes to an end. Now observe, I said unit 1 and unit 3 I have combined together. I have. So what was unit 1 included with? See there, I just explained you with the meaning of market and this particular chart. After that, the revenue concept was there. Total revenue is also called as outlay. Already we have done. Average means just we need to divide it by number of units for whatever revenue we have got. Average concept is easy. Concept remains same. Marginal. Two formulas. Output is continuous. Output is not continuous. And we also explained this particular graph. Revenue curve in monopoly. TR curve is U shape. AR curve is flatter. MR curve is. So same thing we explained it, and even in perfect competition market, P equals AR equals. Already we explained it. Clear? And see this graph also we explained. And there is third formula to calculate. MR. We explained it. So these were the concepts of unit 1, and there are two principles. Principle number 1 that speaks about shutdown point. Already we have done the shutdown point. When a firm is unable to recover their total variable cost, it has got a shutdown. Two types of shutdown, temporary shutdown and long-term shutdown. Principle 2, firm equilibrium. What is a firm equilibrium? MC should be equal to MR, and MC has to cut MR from below, and moreover that is the maximum profit level that the firm can earn its lifetime. Beyond that, if they produce, they will start incurring losses. So by this, entire chapter 4 comes to an. So in the previous class, we had discussed about chapter 2, chapter 3 and chapter 4 of economics. So the remaining portions are chapter 1 and chapter 5 of economics. So in today's class, we shall start with chapter 1, then we finish chapter 5, and then we will enter with BCK. So chapter 1 speaks about introduction to business economics. So here we will be speaking about business economics. Whatever you guys have studied in your first PUC and second PUC, that is 11th and 12th, that was completely related to general economics. But here we don't consider much of a general economics. We will be studying about business economics. So first let us understand some basic components about this economics. So who derived this subject called as economics? Adam Smith. And it is from a dash language. Greek language. There are two simple words. One is oikio, second one is nomia. Oikio refers to household, nomia refers to management. In short, what is economics? Economics is the art of household management. And Adam Smith was the very first person to give a systematic definition of economics. In his famous book by name, An Enquiry into a Nature Causes Wealth of Nations, popularly known as Wealth of in the year 1776. Before Adam Smith, the subject called as economics was studied under a part of political economy or under political science. Adam Smith gave a systematic definition or a separate status to the subject called as economics. Henceforth, Adam Smith is called as father of economics. Who is Adam Smith? Adam Smith is a father of economics. He was the first person to give a systematic definition of economics through his book An Inquiry into a Nature Causes Wealth of Nation, popularly known as what? Wealth of Nation or wealth definition of economics. He said economics is a study about wealth. Economics is a, and later on the theory was next taken over by Alfred Marshall. He said economics is study about welfare. Like this, whatever we studied from an economist point of view, that is Adam Smith wealth definition or Alfred Marshall welfare definition, these two are the predominant definitions which was given to a subject called as economics. Henceforth, Alfred Marshall's definition was also justified and he was considered as a father of modern economics. Father of, who is the father of economics? Alfred Marshall. Adam Smith. And who is the father of modern economics? And as we all know that human wants are, but can we satisfy all our wants? Why? Because we have a limited resources. We have a limited, so resources are relatively scarce in nature. Henceforth, because of these two components, this is called as fundamental problem in economics. Human wants are unlimited, but resources are limited. By using this limited resources, we try to satisfy unlimited wants. In short, economics is a study of how we work together to transform the scarce resources of goods and services to satisfy the infinite wants that is distributed amongst the goods and services among ourselves. In short, by using this limited resources, we try to satisfy unlimited wants. This is what the general economics used to speak about. But in this chapter, we will not be much interested in understanding general economics. We are much interested or keen about business economics. So what exactly does this business economics speaks about? Taking right decision at a right time. What is it? Taking. So we will be having a multiple option to choose. Out of that multiple option, I need to select the right option and we have to reject the wrong option. That is what, if you remember in the class, I used to give the example. I am the CEO of a Cadbury. Now I have got multiple option. Should I come with ice cream section? Anyhow, we are famous in chocolate. Now I am planning to come out with the ice cream unit. If not ice cream unit, other will suggest, why don't you come out with a stationaries? Like how classmate is there from ITC. You come out with Cadbury stationaries. Other one will say, no, come out with a restaurant and cafe, like experience center. Coffee experience centers are like booming now. Why don't you come out with chocolate experience centers? So I have a multiple options in front of me. Out of this multiple option, I need to select one. So in order to select one, I have to evaluate the right information and then I need to select the right alternative. So whatever informations I have, I will go through that information. I will make sure that, okay, whichever is a right alternative, I will select, because whatever land, labor, capital organization that I own, I will be using on that one production line entirely. Simultaneously, I cannot, let me say, deploy all my factors of production into multiple things. If I choose one, I have to reject another. So my resources are scarce in nature. When we say resources, even factors of productions are scarce in nature. Suppose if I am using it for ice cream production, simultaneously I cannot use the same for, say, stationery production or cafe units. So if I select one, I need to reject another. So it is nothing but evaluating the information and choosing the right alternative. Evaluating the information and now what exactly is that? See there, economics is a problem of rational business decision making. So it has to be a rational business. What business? So selecting an appropriate alternative at right time in order to achieve organizational goals. So in short, I have to achieve my goals. For that, I should select the right alternative at right time. That is, in short, taking rational business decision making. What does this decision making involves? See there, evaluating the feasible alternatives. In front of me, there were three options. Out of that, I need to select only one. So for that, I should have a rational judgment on all the basic informations, whatever informations I collect. Okay, who is the competitor in ice cream? Who is the competitor for stationery? Who are the competitors for a cafe section? Can I sustain? Do I have an opportunity or threat in the environment? I need to evaluate all the basic information and I need to choose a which are those productive resources, land, labor, capital and organization, which are limited in nature. I have to employ them and I know that these limited resources have got alternative uses. So therefore, most effective alternative should be chosen and less effective alternative should be. In short, selecting a right alternative at right time. Right alternative at. That is what business economics is going to speak about. So in short, we need to first evaluate all the basic informations. Out of that, I need to select the right alternative so that I can achieve my business goals. I can achieve my. So in short, taking right decision at right time to achieve organizational goals. That is called as business economics. See there, business economics is used for a business decision making, which is going to fill the gap between economic theory and business. So whatever my general economics was saying, it says that human ones are unlimited, resources are. We need to use the scarce resources to satisfy the unlimited. Same thing, whatever theoretically we study, that has to be even more applicable in the real world. There are many concepts where what we study and what we practice are different. But now, in case of business economics, what we are studying and what we follow or what we practice, it has to bridge the gap. It has to bridge the between all the differences. It should be not different. It should be one and the same. Whatever the real problem that we are facing in the world and what we are studying here, the theory, when it is implemented, that has to solve the practical problem. That has to solve the. So it acts as a bridge now. It will act as a bridge in order to make sure that the theory is fulfilling the gap of practical. That is what is business economics. See there, which integrates economic theory with business. It is the process of business decision making through economic tools by using which all tools like demand, supply, cost, pricing and competition. Demand, supply, chapter 2. Pricing and cost was chapter 3 and chapter 4. Already we did this. By using all these micro factors, we will analyze the information and then we are going to take a right decision. So this is what is business economics. In short, taking right decision at right time in order to achieve organizational goals. Clear? So same to same thing, I've given it in a form of a definition there. So this is the meaning of business economics. Next, micro and your most favorite one. So there are almost like 6 differences here. All the 6 differences are important. You know that in microeconomics, we completely take assumptions. Yesterday when we are discussing assumption in every concept, LDMU, assumption, law of variable proportion, assumption. In most of the places, we took assumptions and then we understood the concept. So microeconomics is full of assumption. Microeconomics is full of, and they are unrealistic in nature. It is full of assumptions and unrealistic. But macroeconomics is realistic and there is no. This is the one big differences between micro and macro. And the basic differences, micro means we only take up that one individual element and we study in detail. We study in detail about it. For example, demand, we study in detail of it. When we speak about production, we study in detail. Cost, in detail. So it is an individual aspect of an economy which we study in detail. But macro, we consider entire economy as a whole. We don't study individual aspect in detail. In general, for an entire economy, whatever is applicable, we study the economy as a whole. For example, national income, unemployment rate in the country, inflation in the economy, like this for the entire nation as a whole we consider. But microeconomics, we study about individual aspect like demand, supply, cost, production. Clear? So macroeconomics, national income, inflation, unemployment rate, all such things whichever is applicable to the entire nation as a whole. And already in yesterday's class we discussed this when we were discussing market equilibrium. Microeconomics speaks about macroeconomics, and microeconomics is internal to the organization. That means it is within an organization. Macroeconomics is external to the organization. And one more difference is micro is called as a worm's eye view. When a worm looks into the world, it only sees into a smaller portion and it will only analyze that one portion. But macroeconomics is like a bird's eye view. When a bird is flying over a sky, it can see the masses. So macro is a bird's eye view, micro is a worm's eye view. See the differences. Micro studies about individual aspect. Macro, entire economy has a whole. Micro is a price theory. Macro is a income theory. Micro is full of assumptions and unrealistic. Macro is realistic and no assumptions. Micro is internal to the organization. Macro is external to the organization. Micro is worm's eye view. Macro is bird's eye view. So this is the difference between micro and macroeconomics. Clear? Next, nature of economics. So under this nature of economics, there were three concepts that we have to discuss. Number one, is economics science or an arts? Is economics, what is it? It is both science as well as arts. If any subject has to be called as a science, how many conditions were there? 5 conditions were there. Condition number 1, it has to be a systematic body of. Condition number 2, answer should be. Condition number 3, answer should be. Condition number 4, there should be tools to measure. Answer, last but not the least, universally acceptable. What is the systematic body of knowledge? The subject should be in a hierarchical way. First we study basics, then we go for advanced concept, then we come to the tougher concepts. Like this, it has to be in a systematic way. It has to be in a. So when we are studying in economics, first we understood the basic chota mota part, demand, supply, then we interconnected, then we got cost, production, and then we started market. Like this, we went in a systematic way. From the basics, then we went to the advanced. From advanced, then to the tougher part. So even economics has got a systematic body of knowledge. Second one, answer should be in especially price elasticity, P by Q into change in quantity by change in price, formula method, arc method. We were able to measure the answers. We were able to measure the answers. Clear? So even if the answers are measurable, that is considered as a science. Not just measuring. Answer should be when price increases demand, when price decreases demand. Yes, we can able to predict the answers in economics. Next, there should be tools to measure answer. Utils is a tool to measure utility. Like how we measure distance in terms of kilometers, liquid item in terms of liters. Same way, we can also measure utility by using a tool called as utils. Last but not the least, universally. But in economics, this condition cannot be satisfied because whatever we have a demand in Bangalore, that is not the same in US. That is not the same in Australia. That is not the same in XYZ nation. It will differ. Law is accepted everywhere. See, law is accepted, but there is no same law applicable to every country. For example, in India, you cannot import a second-hand cars and sell it. But Bangladesh allows it. That is not a law, that is a rule. That is a fundamental rule of demand. When price increases, demand decreases. Law is something which has to be abided by everyone, whether you like it or whether you don't like it. So rules are different, laws are different. So this is a general rules, whichever is applicable to the particular entire nation or entire economy. Same way, now if at all I take an example, for example in India, assuming that I'm a manufacturer of 2 kinds of car. One is Audi, second one is Maruti. Which car has got more demand in India? Maruti, definitely number 1 sales in India. So that is Maruti Suzuki. Suppose if I speak about US market, they don't prefer Maruti over there, even though if I go and launch there, they always look out for a premium segment. So demand for a premium segment cars are more in US. Demand for a basic necessary cars are more in India. Is it same? That is what I'm saying. It is not universally acceptable. Same rule is not applicable in each and every part of the economy. Henceforth, no doubt economics will satisfy the first 4 conditions. It will not satisfy the universally acceptable condition. That's the reason, no doubt economics is a science, but it is only a partial science. Economics is not a pure science. Clear? So no doubt economics is a science, but it is a partial science. It is not a pure science. Next condition, economics as a art. In short, practical application of knowledge into the business is called as art. Science will teach us to know things. Arts will teach us to do things. This is the difference. Whatever we study in theoretical, that has to be applied in real life, and that practical application is called as art. We know that when we give offers and promotion, our customers gets attracted, especially in India during the time of quarter 3. That is Diwali, Dasara, All list of festivals will come like New Year, Christmas. During these time offers will be more and my people are also ready to buy more during the time of offer. Yes, I have studied this. I need to apply that in the real life. I need to apply that when I'm conducting the business. That is what is a art. That is going to bridge the gap between the theory and practical application. That is called as a art. See there, art is nothing but practice of where science teaches us to. No, art teaches us to. Science is theoretical, art is. If we analyze economics, we find it has a features of arts also. The various branches like consumption, production, public finance, etc. provides. So various economics problem which we are going to face in a day-to-day life. So whatever we are facing a problem, for that we need a solution. No doubt human ones are unlimited. We have limited resources. How do we satisfy this unlimited want through the limited resources? How can I practically make it possible? That is also a art. That is why economics is considered as both. Economics is, it is science as well as arts. Clear? Next, we also discussed about positive signs, and if you remember, I gave this example. I'm teaching to the doctors in the class. To my left hand side, senior doctors. To my right hand side, junior doctors. Shashi Kiran is finding some symptoms. Unable to eat water, drink food. Unable to eat water, drink food. This is the symptoms. Okay, when I find an issue, definitely I first go and consult a senior doctors. Okay, I went to a senior doctor. I said about my symptoms. They will make me to run through particular test and they will say what it is. What exactly is my problem? Okay, I will say, okay, solution. They are like, Pesa de. I said, no money. They are saying, Tata, no solution, get lost. So, same. I went to some other senior doctor, same happened. Other senior doctor, same happened. All of them are same. All of them are. That means they will say what it is. Exactly what is my problem. And their main objective is uniformity. Everyone are same. They only just described my problem. So, they are called as descriptive signs. They never gave me a prescription. Okay, doctor. Oh, I will go to junior doctors. Get lost. Okay, now I came to a junior doctors and I explained my problem. I think this is your problem, or what ought to be. They will say this also can be the problem. So they will not say what exactly it is. They will say what ought to be. And I said, see, I don't have money. I'm a very poor kid. Why don't you just give me some treatment? Okay, do one thing. Stand upside down 30 minutes every day. Your problem will be solved. Blood will reverse flow to your brain. Things will be normal. Okay, now they are not just describing my problem. They are also giving a prescription. So they are called as prescriptive signs. Now they have cleared MBBS. Now they want to become famous. They want to become a role model to everyone. So their main objective is ideal. Their main objective is. But senior doctor's main objective was uniformity. Their objective is ideal. Senior doctor said what it is. Junior doctor said what ought to be. Senior doctor just described my problem. Junior doctor prescribed a solution. Same way, senior doctors are like positive signs. Junior doctors are like normative signs. See there, it is a systematic body of knowledge which say what it is. Junior doctors, that is normative signs, what ought to be. Senior doctors main objective is. Junior doctors main objective is who just described my problem. Senior doctor positive signs who also prescribed me a solution. Junior doctor normative signs. These are the first three basic differences. Next, see there, it does not pass any value judgments. They didn't prescribe anything. They will not pass any value judgment. Who? Positive signs, senior doctors. But who passes a value judgment? Junior doctors, normative signs. You senior doctors are more concerned with facts because blood test has been done. See, this is the reason why it has happened. You are more concerned about what? Facts. But these people are not even concerned about fact. Just by the eyesight, like all the Guruji, old world kind of superstitious people, they will say, ah, this is your problem. Like this, they are not at all concerned with facts. Senior doctors, that is positive signs, always and always explain. This is where exam questions have come. It explains cause and effect relationship. So if in 1 week, if you don't get operated, there is high chances of dying. So within 1 week, you should get your operation done because that is one tumor that has been grown inside your tummy which has to be removed. If not, you will find this even more worse and things will go wrong. But they will say how things should be. See, your tumor is like 30-degree angle. It should become like 90-degree angle. If it becomes 90-degree angle, it will be flow. It will be having a smooth flow of blood. So stand upside down 30 minutes every day. So they will say how things should be. Just for the sake of understanding, I said that is not the concept. So who is concerned with facts? Positive signs. Who is not concerned with facts? Who will speak about how things should be? Normative signs. Who is explaining cause and effect relationship? Clear? Suppose in an exam, if they have given a statement, they are just describing the problem. For example, there is a heavy rain expected in the next 3 days in Bay of Bengal. Positive statement. They are just describing a problem. Next, there is a heavy rain expected for the next 3 days in a Bay of Bengal. Fishermen are advised not to go for fishing. They are also prescribing a solution there for that. Not just describing a problem, also prescribing a solution. Then it is normative. If they are just describing a problem, then it is positive signs. Clear? So this was the concept of positive and normative signs. The last topic of unit 1, that is pragmatic in approach. That means whatever we are seeing the real problems in the world, such problems has to be faced by the business economics. That is what? Whatever theory Adam Smith gave in 1776 or Alfred Marshall spoke about in the very old days, no doubt that is applicable during those 16th and 17th century. But whatever business economics that we are speaking today, that is not just a theory, it should also apply in the real world. It should also apply in order to tackle the problems what we are facing today. So all this business theory has to tackle the real problems faced by the firms in the present time. That is what is pragmatic. That is what business economics does. What we find a problem, for that there is a solution through the business economics. See there, microeconomics is completely abstract and purely theoretical, and they analyze this economic phenomenon under unrealistic. In the contrary, or in the contrast, business economics is pragmatic in its approach. It tackles practical problem that the firm faces in the real world. This is what pragmatic in nature. Clear? And all these other points, interdisciplinary in nature, it borrows several concepts from other subjects. Economics is not just independent, it is interdependent and incomplete elements. So because all those general price level, income, employment level, whatever they speak about, they are not complete structure that keep on changing every now and then. They are completely incomplete elements, and based on microeconomics and completely unrealistic assumptions are there. We are analyzing based on by keeping few things as constant. Like this, few objectives have been made in order to achieve our goals. Clear? So this is what unit 1 of chapter 1 is all about. Clear? So this unit 1 was only speaking about the basic theories. It only spoke about the meaning of economics. Then we spoke about what? Micro and macroeconomics. After that, positive and normative science. Economics as science are arts. And next, pragmatic in approach. So this was just a pure theoretical unit 1 of chapter 1. Unit 2 is most important. In unit 2, we'll be speaking more about basic problems of economy and types of economy. There are only 2 concepts, but these 2 concepts are super duper dhamaka. That is where exam question comes. That is unit 2 of chapter 1. So we know that in economics, we have a limited resources. So through using this limited resources, we are trying to satisfy unlimited want. So the central problem of economics is the scarcity of resources. What is it? So, but we have an unlimited want. By using the scarcity of resources, that means limited resources, we need to satisfy unlimited want. So what happens now? The same resources have got a multiple uses. Human resources. Either I can start my own business, either I can employ somewhere else, or either I can help to someone. Like this, a same resources can be put into multiple uses. Like this, alternative uses are there. So we should make sure that this allocation of resources is taken care properly. So the central or a basic problem of economy arises because of, that is because of scarce resources, we have to allocate them in an effective way. So with such respect, there are 4 basic problems in an economy. How many basic problems? 4 basic problems in an economy. Which are those? Number 1, what to produce. Number 2, number 3, number 4, what provision should be made for economic development or economic growth. This is also called as sustainable development. So these are the 4 basic problems of economy. What to produce, how to produce, for whom to produce, and what provision should be made for economic growth. Clear? Basic problem. Number one, what to produce. So for a layman, if we go and ask what are the problems of India, I will give a big list of reasons like poverty, unemployment, corruption, etc. Blah, 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 blah. But from the economist point of view, there are four basic problems and they are based on resource allocation. They are based on number one, what kind of goods and services should we produce in an economy? No doubt, resources are scarce. Within the available resources, say that, okay, should I produce two-wheelers or should I produce four-wheelers? Suppose if my people are more preferring to a two-wheelers, but I will get more profit in four-wheelers. If I just produce four-wheelers without producing two-wheeler, that means it is a misallocation of resources. My people are not at all demanding for a four-wheeler, but you will be more profitable in four-wheeler, so you are producing. But are we demanding it? What are we demanding? So first I should understand what kind of goods and services should I produce in this nation. That is also called as problem of choice making. What is it? Problem of. So what kind of goods and services? Is it durable goods I should produce or perishable goods? Bench, durable. Chocolate, perishable. Single time use or multiple time use? Bench, suppose I can use it multiple number of times. Chocolate, only single time use. Perishable. Superior goods are inferior goods. So instead of bench, if I am producing furniture, luxury, superior, a normal basic necessary of bench, that is for a teaching purposes, that is inferior in nature. So like this, I should choose which kind of goods and services, not just which kind, even what quantity of goods I should also produce. See there, human wants are unlimited and resources are. In order to satisfy such human wants, the question arises, what goods are to be produced and in what quantity these goods have to be produced. In short, what to produce is also considered as problem of. Clear? The second problem is how to produce. Okay, I decided I will be producing the chocolates. Okay, now to produce chocolate, should I use more of a capital, that is machinery, or use more of labor? Now this is a question, which kind of technique I need to choose? Should I choose capital intensive technique or should I choose labor intensive technique? Now this is the biggest question. Now a nation which is good in capital, that means which has got more of money, then the use of more of capital intensive. A nation like India where the labor supply is more, we should use more and more of labor intensive. See there, the problem arises through the problem of choice of technique for production. Should I use labor intensive or capital intensive? Labor intensive should be chosen only with labor surplus economy. Capital intensive should be chosen only with capital surplus economy. So a developed nations are capital surplus, they use more of a machine, that is capital intensive. A developing nation or underdeveloped nation like India will be having more number of labor forces, so we should concentrate more and more of using labor intensive technology. So second problem is problem of technique, how to produce. Okay, I chose I will be producing a chocolate by using a human resources. For whom to produce? Which part of a society am I producing? Is it for a luxurious class, middle class, or a lower class? Or who exactly are my targeted customer? Or let me say which age group? Is it a small age group, middle age group, or large group? Or let me say senior citizens. What is their ability to purchase? Can they afford my commodity? I will say my chocolate is 500 rupee each. Can they purchase? They will say Wagallu. 50 rupee, let me think. 5 rupee, yes, definitely good. So like this, I should also understand their ability to purchase, So these are the elements which I have to consider even before thinking about producing goods and services in a nation. So third problem is for whom to produce, which determines the distribution of goods among the various individual, like class of society, targeted customer, their ability to purchase, to decide about the share of different people in the nation's goods and services. So first problem is what to produce, that is problem of choice making. Second one, how to produce, that is a choice of technique. Third one, for whom to produce, to know who are exactly my targeted customers. Last but not the least, what provision should be made for. Okay boss, you are using lot many resources from the society, not just using it for the present consumption. You should also preserve them, you should also save them for the future usages. Whatever resources are there, kindly use them in an effective manner without wasting them or without over exploiting them. Maybe human resources. I cannot over exploit you people. Work for 8 hours, work for 10 hours a day. No, I can't. Or I cannot make you simply sit idle. Underutilization. Underutilization should not happen, or overutilization should also not happen. I should have a optimum usage, and not just usage, and I should also preserve them for a future generation. Preserve them for a, that is what we also call it as sustainable. Meeting the needs of present generation without compromising the needs of future generation. So that is what provision, what are we keeping it aside for a economic growth. So these are the 4 basic problems of a economy. What to produce, how to produce, for whom to produce, what economic provision should be made. Clear? So the last topic of the chapter, that is types of economy. So any country on this earth for it matter, they will be following any one of the types in this 3 kinds of economy. Number 1, capitalistic economy. Number 2, socialistic economy. Number 3, mixed economy. So there are 3 kinds of economy: capitalistic, socialistic and mixed economy. Let us discuss that in detail. I have also given you this notes. So it was like complete master notes. It was including advantages, disadvantages, characteristic features, completely everything. So capitalistic economy is also called as what? Free market economy or laissez-faire economy. In short, this is a kind of an economy which is operated by private enterprises. Private. Henceforth, it is also called as private run economy. Socialistic economy was completely controlled by government. Such government was called as CPA, Centrally Planned Authority. So completely controlled by private, capitalistic. Completely controlled by CPA, socialistic. Clear? Let us understand one by one. The very first one is capitalistic economy, is also called as free market economy or laissez-faire economy. So point number 1, majority of the factors of production and economic resources are in the hands of private enterprises. We are using the word majority there. It is not complete. It is majority. So majority of the factors of production and resources will be in the hands of private people. And what is the main objective of a private enterprises when they are operating? Profit motive. And these type of an economy is completely carried out by demand and supply. That is nothing but market forces or price mechanism. They will consider the economic activity and then production will take place based on demand and supply. And in these kind of a market, government interference is almost, that is why it is called as laissez-faire economy. When the government intervention is very minimal or almost zero, that is considered as laissez-faire economy. And the most important point, consumer sovereignty is not restricted. That means as a customer, we have got a wide choice to choose. If not from one person, I can also, let me say, purchase from other person. Like this, I have an option to choose. The choice making ability of a customer is not restricted. Is not restricted. That is called as consumer sovereignty. That is not restricted in capitalistic. And there is something called as right to property. Create as much as wealth as possible. No one is going to restrict you in capitalistic economy. And in capitalistic economy, rich becomes even more richer and poor remains poor. That is what we call it as there is a unequal distribution of income and wealth. What is there? Unequal distribution of income and wealth. So these are the characteristic features of capitalistic economy, and all developed country, all will follow which kind of economy? Capitalistic economy. So these are the characteristic features of which economy? Capitalistic economy. In short, they are a private run economy. What are they? Next comes completely opposite, socialistic economy, which is carried on by a CPA. That CPA is called as Central Planning Authority. Now it is a CPA run economy. That's the reason it is also called as command economy. What is it? Or centrally planned economy. Here complete resources will be in the hands of CPA. That is in the hands of government. See there, over in capitalistic, only majority of factors of production was in the hands of private. But here, complete factors of production and resources are in the hands of CPA. That is Centrally Planning Authority. Over there, private enterprises are profit motive. But here, the CPA is a welfare motive. My intention is not profit. My intention is to create welfare in the society. And in case of capitalistic, demand and supply was operating the market. But here, who will operate? CPA. The government is going to control the market. And over there, we had something called as right to property was existing. But here, there is no right to property. There is a licensing existing. What is existing? And moreover, there is a complete interference of CPA. Each and everything is decided by whom? CPA. That means there is no freedom to private people. In capitalistic economy, private people had complete freedom. In socialistic economy, even though if a private has to operate, they come under the control of CPA. CPA will decide everything, what to be produced, how much to produce, at what price to sell. Each and everything is decided by whom? That's the reason we say private enterprises do not have a freedom in socialistic. Where did they have a freedom? Capitalistic. So there is no freedom to private. In capitalistic economy, choice making ability, that consumer sovereignty was not restricted. But here it is. Only whatever goods have been decided by CPA, that is available, whether you are a rich, whether you are a poor, whether you are a XYZ person. It doesn't matter. Everyone gets the same kind of goods and services. That choice making ability is absent in which kind of economy? Socialistic economy. As I said, over there right to property was existing. Here licensing is existing. For each and everything you should take license from the government. Getting a license from the government is as simple as meeting the God in person. Even that is not possible. Even this was also not possible. That was not that easy. And in socialistic economy, it is considered as equitable distribution of income and wealth. What is it? Distribution of income and wealth. Whether you are a rich, whether you are a poor, it doesn't matter. Everyone gets same kind of goods and services. For whatever work you perform, everyone gets the same amount of salary. There is no discrimination. Remember, in the present context, none of the country is purely following socialistic. None of the country is purely following. But the elements of socialistic is followed by Vietnam, China and Cuba. Vietnam, China and who developed this concept of socialistic economy? Karl Marx and Friedrich Engels. Karl Marx and Friedrich Engels in their book called as Communist Manifesto. Communist Manifesto, they developed this concept of socialistic economy. This was followed by USSR until 1991, presently called as Russia, that used to follow the socialistic economy, but post 1991 they are also not following. Clear? So it used to be followed by Russia, but none of the countries purely following socialistic. But elements of socialistic is followed by Vietnam, China and Cuba. Vietnam, China and clear? This is what is capitalistic economy. Socialistic economy. Capitalistic economy is a private run economy. Socialistic economy is a CPA run economy. And the third type of economy is a mixed economy, where combination of both capitalism as well as both are existing. This is followed by all underdeveloped and developing nation, where private and government both exist side by side, wherein competition will be there only in case of private. Government organization, they don't have a. Usually in mixed economy, decisions are made by the government. That has to be followed by private. We consider government has got a upper hand. Government has got a upper hand, or a major control will be in the hands of a government. See there, comparison between capitalistic, socialistic and mixed economy. Ownership of property, who owns it in capitalistic, socialistic, mixed economy? Both. Freedom to enterprises, private enterprises, that exist only in capitalistic. There is no freedom for private in. Here only freedom exists in private. In public there is no freedom. Motive of production in capitalistic it is. Here it is. That is welfare motive. In mixed economy, profit motive in private sector, welfare motive in. Who governs the production? Who will take care about the production? Here demand and supply. That is called as price mechanism in capitalism. In socialism, planning mechanism. CPA will take care. Here both price and as well as planning mechanism, both will take care. Competition is existing in capitalistic economy, but there is no competition in. Only government organizations are existing. Here it exists only in private sector. Distribution of income, it is unequal in capitalistic. Equal in, this is important, it is considered to be unequal in mixed economy. Even mixed economy is considered as unequal. Role of government, there is no role at all. Completely freedom to private. Minimum intervention of government or zero intervention. That is what is laissez-faire economy. Here it is complete. Role of CPA, centrally planned authority. Here full role in public sector and limited role in. This is what the entire chapter 1 of economics is all about. Clear? So last but not the least, that is chapter 5, business cycle. The chota chapter and also the most important chapter which connects with CA inter-economics. So business cycle, that means there is a fluctuation in the economic performance that occurs due to what? That occurs due to business cycle. That occurs due to business cycle is also called as economic cycle or trade cycle. That means every nation will not perform always in a very good fashion or in a very good manner. There will be ups and downs in an economy. Such ups and downs are due to changes in business cycle. Due to changes in, see there, each and every and the country has to go through in there. That is going to affect various economic factors. Various, like what? Demand. Suppose, just assume that in an economy, if demand is good, demand is increasing day by day. What will happen? If demand is increasing, then in order to meet the demand, we should also increase our, in order to produce more and more, we should also employ. Not just employing more and more. In order to produce more and more, I should also invest more and more. If I don't have a money for that, I should go and ask for a loan. That means bank credits will also increase in an economy. As I've taken a loan from the banker, and I'm also producing more and more, along with that I need to repay back my money with interest, not just the loan money. So what will I do? I will increase my, if price level is increasing, then profit will also. If profit is increasing, then my ability to earn income is. If income increases, automatically our standard of living will. And we are producing more and more, because of the GDP of a nation will. See, this is like a chain effect. If any one factor gets affected, the series of factors will also get affected. So it is not just a good trend, even a bad trend will also affect all the series of activity. Whatever we are seeing the upwards trend, now everything will start seeing the downwards trend automatically. Suppose if demand is decreasing in an economy, people don't want to buy more and more. Why? Because they don't have a proper income. Say recession has started, people are losing their jobs, they don't want to spend more now. So let me say demand is decreasing. Should we produce more? If I need to don't produce more, should I need more employees in organization? If I don't have more employees in the organization, when I'm not producing more and more, what will happen to the income earning capacity of all these employees? Decreases. Not just income earning capacity. Now I'm firing out of the organization because already the existing stock itself is not sold. People are not ready to buy. My closing stock is more. So I will start giving more offers and promotions in order to sell the commodity. So what is happening to the price level? If price level decreases, profit will. And moreover, income is decreased. So what will happen to the standard of living? And we are not producing more. We are producing less. GDP will decrease. When the GDP is decreasing, automatically income is less, standard of living is less. Automatically it affects the growth perspective of the economy. Like this, there will be ups and downs in an economy. Such fluctuations are because of what? Changes in trade cycle or business cycle or economic cycle. So it affects the series of activity. It affects the. So that is the reason why we need to control this business cycle. If at all we don't control it in a proper way, that will affect the economic performance of a nation. And see there, whatever these fluctuations are there, like this ups and downs, they are recurrent. They are. And they are going to occur periodically. That means one after the other in a repeated manner they are going to occur. But not always at a regular interval. Sir, January it will be in a very good position. February even more superb. March decline. April worst phase. Again, let me say June complete bottommost position. No, I cannot predict that. I cannot predict. We can never predict the business cycle even before they occur. Even before they. Remember, every business cycle has got a different stages. Has got a different. And moreover, they do not have a specific duration of time. Like, okay, expansion is for 1 month, contraction is for 1 month, peak is for 1 day, contraction and trough is for 1 year, like this I cannot define it. Few business cycle are short ending, few business cycle are long ending. They do not have a specific duration of time. They do not have a specific duration of time. See there, every business cycle starts from trough. That is the complete bottommost position. And then it passes through the recovery phase. This is what is a recovery phase. And after recovery, it comes to, finally it reaches. And then there is a downward trend called as, and there is one more worst phase called as depression. And finally it reaches back. Like this, there is a ups and downs that keeps on occurring in the economy. And there are 4 stages in business cycle. How many stages are there? Number 1, number 2, number 3, number 4. Recovery is not a stage. Recovery is not a stage. Clear? The worst phase of contraction is called as depression. Worst phase of contraction is called as what? Depression. Clear? Now let us understand one by one what will happen in what stage and what are the elements that we have to remember. Clear? Say I introduced a commodity into the market. Now this commodity is slowly picking up the demands. Commodity is slowly becoming famous. That means demand is increasing. I should produce more. In order to produce more, I should appoint more people. I should invest more money. Bank credit is increasing. All these factors are increasing. Standard of living increasing. Things are performed in a very good manner. That means slowly economy is in which phase? And I will be in a good mindset, positive mindset as a manufacturer to invest the money. And moreover, remember this very carefully. During the time of expansion, business are operated well, demand is increasing, employment is increasing, everything is going in a good way. And even the economy faces what? Already I have explained in detail with Zimbabwe case study. Zimbabwe started facing hyperinflation. I explained it, how to control inflation, all such elements. Again, it comes in BCK. So, because of inflation, that is because of more money in the hands of a people, that causes inflation. The main root cause of inflation is what? More money in the hands of a people. So, we need to control that. So, every economy would like to control the inflation. If it goes outside the beyond the limits, then that will lead to uncertainty in the economy and economic performance will decrease. That is what happened in Zimbabwe. I clearly explained it. Now, because of expansion, there is an inflation in an economy. When there is an inflation in the economy, people have more money in the hands, they are ready to buy more, they are ready to spend more. That means demand generating capacity is also more. Finally, this inflation will occur and expansion will reach to that is a topmost position where every manufacturer will start making high amount of profit. This will not sustain for a long term. Peak is only for a short term. Then economy slowly starts seeing a downward trend called as contraction. This is where inflation will turn into a deflation. People are not ready to buy. Demand slowly starts decreasing. If demand decreases, output starts decreasing. If output itself is not there, employment starts decreasing. If employment starts decreasing, income earning capacity starts. If income earning capacity is decreasing, the standard of living will decrease. Now slowly people are thrown out of the job. That is called as recession. This contraction is also called as what? And this is the phase where, this is the most important thing, a manufacturer will be in a dash mindset. Negative or pessimistic mindset. Negative or, I know that there is a worst phase waiting for me called as depression. Will I come out with new investments? Will I try to introduce a new product here? Definitely no, because the things are not good. Economy is seeing a downward trend. Economy is seeing a, and finally everything will come to the bottommost position, almost at the very bad phase called as depression. And this is where the most important point, people starts taking out their money from the bank. People starts taking out the money from their bank. That means they will like to hold liquid cash. They will like to hold. Why? I explained you the reason here. Interest rates will decrease. Interest rates will, that is connected with inflation and deflation. This is connected with what? Inflation and deflation. What is the main root cause of inflation? Excess money supply in the economy. Deflation, less money supply in the economy. If you remember, I said every economy has got a policy. There are 2 kinds of economic policy. How many kinds? Number one, fiscal policy. Second one, monetary policy. Who creates fiscal policy? Who creates monetary policy? Central Bank of a nation. So there are two tools under fiscal policy. Number one, government expenditure. Number two, taxes. Under monetary policy, there are four elements, but here I will only explain interest rate. Now, when there is a inflation in an economy, that means there is more money supply. Now we need to control the money supply. So what will happen? Automatically, government starts spending less money in the name of constructions, bridges, dams, or whatever it is. They will start spending less money, and all those expenditures of government will decrease. Why? Because already people have more money in the hands. Even if I spend more money, I'm pumping in more cash into an economy that will increase even more money supply. So I will decrease the government expenditure, and we will increase when we increase the tax, automatically our people will not spend more money. Their disposable income will decrease, and we will also increase suppose instead of spending the money, now if you keep the money in the bank, we will get more interest rates. People get attracted. So they will put their money inside the bank. That means money supply, whatever excess was there, now that excess money will come inside the bank. Because if they deposit money, they will get more interest. And not just that, for depositing, if anyone is coming forward to take a loan, even for such interest rates are high, it will not come forward, because already there is more money supply in the economy. If we pump in even more credit money, that will increase the money supply. We want to cut that down. So interest rates will. That's the reason I didn't explain about interest rate when I was explaining the entire circuit here. See there, interest rate. At the time of expansion phase, even interest rates will increase. All the factors will be increasing. This is what will happen at the time of. So what will happen at the time of deflation? Everything will go opposite way. Now government expenditures will decrease or increase. Superb. Government expenditures will increase because there is no money supply in the economy. There is a less money supply. That is what deflation. Now government will start spending more and more, and it will pump in money into the economy. That will activate private enterprises as well as other kind of economic activity. Tax rates will. So people can spend their money without even having a fear of taxes or GST, goods and service tax, indirect taxes, and interest rates will decrease. It will go down. So people will come forward to borrow the loans and invest their money into the business. But there is one more problem. First of all, we are losing the jobs because of deflation and because of economy not performing well. Bloody rascal, I kept my money in your bank because interest rates were more. But now we have reduced here. One way I don't have a job. My income earning capacity is gone. And your interest rate is also low. So, boss, I will not keep the money in bank. Rather, I will hold the money as a. That is what happens during depression. And finally, economy reaches its bottommost position called as trough, where everything is under a standstill, full complete bottommost position. Slowly inventions and innovations will happen. Economy will come to recovery. Slowly demand starts picking up. Slowly output starts picking up. Slowly employment starts picking up. Again that recovery. This is place where every manufacturer will be in a positive mindset or optimistic mindset. Positive mindset or? Again, recovery will emerge into expansion, from expansion peak to contraction, depression, trough. Like this, business cycle keeps on recurring. Keeps on. That is why we call they are recurrent. They are recurrent. Few business cycle, this entire cycle, it might take just 1 month or 1 year. Sometimes it might take 5 years, 10 years. Slow. Few business cycle are short ending and few business cycle have long ending. So this is what the concept of business cycle. Clear? Here 4 things are important. Expansion, there will be inflation in the economy, and then there is an upward trend in the economy. Manufacturers in a dash mindset or optimistic mindset. When the economy is seeing a downward trend, manufacturer will be in a and economy will be in deflation. When the economy is in upward trend, it will see inflation. Clear? When will a customer start withdrawing their money from the bank? When will they start holding the liquid cash? And at the time of depression and contraction, economy will not perform well. Not just economy, firm will shut down their several activities for a time being. Temporary shutdown that happens during the time of contraction and depression. Contraction and stock market will not operate properly. Even stock market will operate in a very bad phase. That is in the time of downward cycle of the entire economic performance. Clear? This is what is the main crux of the story. Business cycle. How many stages are there? Expansion, peak, contraction, trough. Expansion is also called as boom or upswing. Peak is prosperity. Contraction is also called as recession or downswing. Trough or clear? So whatever I just gave an explanation, everything is given here. See there, expansion phase, there will be inflation and almost full employment of available resources will be there. Unemployment will be almost to zero. Peak and contraction. This is the phase where every manufacturer has a negative mindset. And depression. This is the phase where it is a complete lowest turning point and there is a deflation in the economy and interest rates will decrease. Because of that, people starts holding liquid money, all that recovery where the manufacturer becomes a positive mindset. Clear? So I even said even before it occurs, it is highly impossible to predict business cycle, but our economists will not sit silently. They want to identify what will happen next. COVID, oh, this will come 10 waves, this will come 5 waves, this will come 4 waves. Discussion happened in news channels, full experts. So that is what we will not sit silently, even though we know that we can't predict what is going to happen next. But still, our economist is trying to predict. They are trying to what is going to happen next. For them, we call them as indicators. We call them as who tries to predict the next phase of when will it occur, at what time it will occur, for how long it will be there. We are trying to predict it. They are not always. See there, business cycle involves periodic fluctuations in an economic activity such as production, employment, all the things will fluctuate, all those economic factors. Economists uses statistical tools to predict the future performance or further performance of business cycle and also analyze it. For them, we call it as indicators. There are 3 types of indicators. How many types of indicators? Number 1, leading indicator. Number 2, lagging indicator. Number 3, coincidental indicator. So who is this leading indicator, lagging indicator and coincidental indicator? Simple. Who will change even before economy changes. Okay boss, now we are in recovery, next we are in expansion. That means I will start producing more and more. Even before economy reaches expansion, this rascal fellow starts producing more. He will employ more and more people. He will make sure that he is producing it at bulk. Because next week we are entering expansion. Even before economy reaches expansion, they will change even before the economy. They are called as leading indicators. See there, this is a measurable economic factor that changes before the economy starts to follow the particular change trend or a pattern. Lagging indicator, as the name itself says, lagging, tube light. Only after economy starts to follow the change, they will change. Coincidental indicator, this is important. They will not go further, they will not stay behind. They will only go with the flow. They will only go with the, they will change according to the changes in the environment. That means they will only speak about the current state of economy and they are going to move along with the economy. But they will never say in which direction the economy is heading. So in short, leading indicator will change before, lagging indicator will change, coincidental indicator is going to move along with the economy and they only speak about the current state of economy. Clear? This is what are the 3 types of indicators, and in ICA material they have given examples for leading, lagging and coincidental indicator. That is most important. From there MCQ questions have come couple of times. Clear? Next, characteristic features of business cycle. Here 3 additional points you need to remember over and above what I explained. Number 1, this usually originates in free market economy. Such fluctuations or such changes will generally occur in which market economy? Free market economy or capitalistic economy, and it will not stop there. It is going to start in one nation and it also affects other nation. Best example, COVID. It started in China, it affected the entire world. Great Depression of America, it started in America, it also affected the entire world. Recession of 2008, And there is also a prediction that next year also we will face a recession and it is going to be very bad. And the effects are also being hit by to an India. Like this, the predictions have been made. So it starts in one nation and it also affects another nation. And not just that, the most important point, primary sector is not prone to business cycle. Then which sectors are more affected because of business cycle? Secondary and tertiary sector is affected more because of business cycle. These are the three additional things which we have to remember. And as we all know, they occur periodically. They have got different stages. It is difficult to predict business cycle even before them. And whenever they occur, it affects all the economic activity. All that series of activities gets affected and it affects the well-being in the society. So these are the features of business cycle. Clear? And why should we analyze business cycle, or why should we need to understand about business cycle? Sir, when I'm doing business, when I don't know which phase I should invest my money, in which phase I should be more confident enough. If I pump in the money during the contraction phase, will I make a good money out of it? Will I make a profit out of it? No. You are a monkey and your friend is Venki. That is what will happen at that time. So in order to take a right decisions at right time, business economics, taking rational business decision to achieve organizational goals, even we have to analyze business cycle. So business cycle is used for dash purposes, decision making purposes of an organization. Like what kind of decision? Policy creation, profit and wealth maximization, and in short, taking right decision at business economics. So business cycle is also analyzed to take a right decisions at right time in an organization in order to know when to invest, when not to invest, when to perform, when to remain idle. These are the reasons why business cycle are analyzed. Clear? And your one of the favorite question in exam, repeated question. Business whose fortune is closely linked with the rate of economic growth rate are called as cyclical business. That means there are few business where even that performs when economy is performing good. Business will not perform when economy does not performs good. They are closely dependent on business cycle. They are called as dash kind of business, cyclical business. So last but not the least concept of economics, that is causes of what will cause the changes in business cycle. There are two kinds of causes. One, internal cause, and second one is, when we say about internal cause, they are within the organization or they are within the country. They are within the external causes that can be outside the country or between the country. Outside the country or, see there, internal causes of business cycle due to changes in demand. When demand changes, automatically trade cycle will change. Due to changes in investment, even when the business investment changes, the trade cycle gets affected due to changes in. This is the beauty. They didn't explain anything much about it, but straight away the questions will come. That is what I just explained. Government expenditures and tax rate. That comes under fiscal. That comes under fiscal policies. Next, due to change in. That is the main root cause of inflation, and because of inflation and deflation also business cycle gets changes. And due to psychological factors of a businessman, pessimistic, negative mindset, optimistic, positive mindset. So these are the internal causes. These are the now external causes. Because of war, Russia and Ukraine, when the war is going on, they will not concentrate much on performing the business over there. The main concentration is towards war and post-war reconstruction. After the war is done, Ukraine is not like, come from tomorrow, let's do business. They will not say that. Their main concentration is to rebuild the economy or the nation after the war, not to perform the business. And totally business cycle gets affected even because of war, even after the war. In order to reconstruct the economy, business will not take care properly there. Population, when population changes, automatically the demanding capacity will change, and that will fluctuate the entire trade cycle. Technological, whenever technology changes, the way of performing business will also change. And last but not the least, due to supernatural elements beyond the control of human, like drought, famine, earthquake, tsunami, and also COVID. Because of that, we already witnessed 2.5 years how the entire world suffered. So these are the causes of business cycle, internal as well as external. By this, the entire economics revision comes to an end. Clear? 60 marks revision is done. So let's get started. We were discussing about the entire economics topic. So all the 5 chapters of economics are done. Now we are starting with BCK, Business Commercial Knowledge. So totally there are how many chapters? 6 chapters are there in BCK. Out of that, the last chapter is dummy. That means there is nothing to prepare from that. There is only definitions given in last chapter. So, ಏನಾಯ್ತಮ್ಮ? ಆಯ್ತಾ? So now we will be discussing only about the 5 chapters. Out of that 5 chapters, even chapter 3, I have instructed you to prepare the chart and we have to do the smart work over there. Even there is nothing to study conceptually. So in short, there are only 4 chapters about which we will be discussing. Chapter 1, Introduction to BCK. Chapter 2, Business Environment. Chapter 4, Government Policies for Business Growth and Organization Facilitating Business. So these are the 5 chapters which we will be discussing. Out of that, chapter 3 is only chart. So BCK is for how many marks? So in total it is for 40 marks. So let's get started. There is a flow again. First I will be doing with chapter 5. Next we do with chapter 4. Next we come for chapter 1 and finally we do with chapter 2. This is the order in which we will be discussing about. Accepted? So let's get started with chapter number 5. So chapter 5 speaks about what? Chapter 5 speaks about Organization Facilitating Business, OFB, Organization Facilitating Business. So in this particular chapter, there are 5 institutions about which we have to discuss. Even before that, first let us discuss about what is business facilitator. What is it? Business facilitators are the one who they will simplify the functions in of conducting. So the one who simplifies the functions and operations of conducting business is called as business facilitator. So who is a business facilitator? One who simplifies the functions and operations of conducting business is called as business facilitator. Maybe when we are conducting the business, we also take the, let me say, facilities like banking, transportation, advertisement, warehousing. They are facilitation to the business. We are not carrying out the business on an independent basis. We are also taking other activities and services along with business. They are going to simplify the functions and operations. They are called as what? Business facilitators. Out of that, we are classifying this OFB, Organization Facilitating Business, into 2 broad ways. Number 1, regulatory body. Number 2, developmental bodies. This regulatory body is also called as non-funding institution. Developmental body is also called as funding institution. So under regulatory body, under which body? There are 4 organizations about which we will be discussing. Number 1, RBI. Number 2, SEBI. Number 3, CCI. Number 4, IRDAI. These are the 4 institutions which will be under regulatory body. Under funding institution, that is developmental body, there were actually 4. There were actually, but your ICAI has restricted down the syllabus only and only to NABARD. So under developmental body, we only discuss about NABARD, but under regulatory body, we discuss about RBI, SEBI, CCI, IRDAI. Even before starting with RBI, I used to give the background history about the India, and I used to connect the story which was having an interconnection with chapter 5 as well as chapter 4. As you all know, India before independence, we were under the British rule. We were under the, for their better administrative purposes, they have divided India into how many provinces? 3 provinces. Provinces of Bombay, provinces of Calcutta, and provinces of Madras. So all the 3 provinces had a presidency bank. That is considered to be the apex bank of the nation. Like how today we have RBI in India, during those time under the British rule, there were what? Presidency in all the 3 provinces. Presidency Bank of Bombay, Presidency Bank of Calcutta, Presidency Bank of Madras. Such very first presidency bank was established in Calcutta in the year 1806. And later all the 3 presidency bank, I will write it as PB, presidency banks. or it was also called as Bank of Bombay, Bank of Calcutta and Bank of Madras. All the three presidency bank got merged together and they were formed as Imperial Bank of India. So this was the central bank of a nation before independence. Then later in the year 1935, RBI was established as a dash bank, as a private bank. RBI was established as a private bank, and later on, after the independence, after 2 years of independence, that is in 1949, this RBI was nationalized. RBI was nationalized, and then central bank status was given to RBI. Even before RBI, which was the central bank? Imperial Bank. In 1949, RBI got nationalized, and then central bank status was given to RBI. This was one of the part of the story which I explained, and even I explained after the independence of India, I connected even with chapter 4. What is that? India wanted to grow and develop the economy. For that, it shows mixed economy. It shows, and not just mixed economy, we wanted to grow the nation in the path of industry. So our major focus was growing the economy in the path of what? In the path of industry. So for which under industries we have developed various kind of policies and statements. Which are those? See, after the independence of India, we wanted to grow the economy. That means Indian economic development was concentrated on industrial sector. For which in the year 1948 we have established industrial policy statement, and in 1951 we came out with Industrial Development and Regulation Act. There was a specific act which was established for the development of industry, and whatever industrial policy statement we created in 1948, we brought in some changes into it and we made it as Industrial Policy Resolution. What is that? The list of industries was exclusively reserved for a public sector. Except public sector, none of the private can start such kind of a industrial business in India. Only public sector enterprises, PSU dominated. Only they were able to establish an industry. There were many list of industries which was reserved in industrial policy statement. That was brought down to 18 industry. That was brought down to in 1956 industrial policy resolution. And if you remember, I also said India used to follow restricted trade practices. We never used to allow any foreigners to come inside India and establish their business operations. We wanted to protect our domestic industries from international competition. So India was following dash trade practices, restricted trade practices, not just restricted trade practices. Our public sector enterprises were given a greater command in order to develop the industrial needs of India. And private sector was not at all given importance. They were given as some limited roles to just produce some consumer oriented goods. That's it. And this didn't lasted for a longer time. Only for 3 decades we continued, and the problem started from 1980. And also India fought 2 major wars in 1980s. One in 1981, another one is in 1983. One with China and another one with Pakistan. And there was greater problems faced by India from 1980, and almost Indian economy was declared as bankrupt. We were unable to proceed ahead. Whatever policies that we created, that backfired us, and almost Indian economy was about to be declared as bankrupt. And as a last approach, India went and asked a loan from IMF. IMF agreed to give a loan, but how many conditions? 3 conditions: LPG, liberalization, privatization, globalization. That is what in short we call it as new economic policy, which was undertaken in 1991. So these 4 events were important from an industrial perspective. What is that? Industrial policy statement 1948, Industrial Development and Regulation Act 1951, Industrial Policy Resolution 1956, New Economic Policies 1991. So remember, India used to follow restricted trade practices. We never used to allow any foreigners to come inside India, and we had negative thinking against imports. So these all were the policies which we created in the name of mixed economy, the complete socialistic pattern, complete. So this is what has happened in India after the independence. With respect to the banking system, as I said, Imperial Bank of India was the central bank of the nation. Later, after which RBI was established as a dash bank, In 1949, post-independence, RBI got nationalized and then central bank status was given to RBI. Clear? Let's get started with RBI. So, RBI was established when? 1935 under RBI Act of 1934. Under RBI Act of? And when did RBI got nationalized? And the central status was given to RBI post nationalization, and in the same year 1949 we have also established something called as Banking Regulation Act. And not just Banking Regulation Act, RBI has also got the powers through RBI Act of 1930. So for RBI is the only institution in India which has got a powers from two acts. Which are those two acts? RBI Act of 1934 and Banking Regulation Act of 1949. This gives the powers to RBI to regulate all the commercial banks in India. And the head office of RBI is located in Mumbai. And there are 4 branch offices located at Delhi, Mumbai, Calcutta, Chennai. All the 4 metropolitan cities of the nation. And 4 regional offices located in Bangalore, Hyderabad, Kanpur, Lucknow. I even taught you the shortcut here. For a South Indians, remembering Hyderabad and Bangalore is easy. Lucknow and Kanpur might be confusing. Which is the smallest state of South India? Kerala. Vehicle registration starts from K. L. KL. Remember, Kanpur, Lucknow, along with Bangalore and Hyderabad. And remember, RBI is managed with how many board of directors? 20 board of directors. So this is the basic information about RBI. Established in 1935 under RBI Act 1934. Nationalized in 1949. Head office Mumbai, 4 branch office, 4 regional office, 20 board of directors. Has got the powers from RBI Act and Banking Regulation Act. Clear? Next, roles of RBI. This is the most important point here. RBI is a dash monetary institution. Apex monetary. What do you mean by apex? Superior most monetary institution in India to regulate what? Money as well as monetary policy. Not just to control the money or money supply in India. Even policies related to money. If you remember, every nation has an economic policy. Such economic policy is of how many kinds? 2 kinds. Fiscal and who creates this monetary policy? See there, the roles of an RBI is not just restricted to control the money supply. Even that will come out with a monetary policy. Why it has to come out with monetary policy? In order to strengthen and develop the nation's economic as well as. No doubt my main intention is to create a proper financial structure. If we have a proper financial structure in an economy, that will in turn develop the economic performance or economic structure, and it is to maintain economic and monetary stability. Bringing in stability is most important. If there is high fluctuations in prices, we can't take the decisions in a right way. So as a central bank, it has to maintain that there is a stability in an economy with respect to prices, with respect to performance, with respect to any economic activity. There is no high fluctuation. There is no high fluctuation. That fluctuation occurs because of inflation and deflation. So we are not just controlling inflation. See here, it also keeps inflationary trends under. Not just controlling inflation, it should also bring in stability. Clear? And it also advises whom? Governments as well as commercial bank in terms of dash matters. Anything related to money, who will advise? RBI. So in short, I used to make this statement: wherever money is involved, dash is involved. RBI is involved either directly or indirectly. And moreover, not just financing or advising to banks and governments. RBI has also got the rights to represent Government of India in all international monetary platforms. If at all our Nirmala Didi, Finance Minister, is busy, suppose if there is some international monetary conference, RBI governor can represent Government of India and he can attend on behalf of government. So that is what the powers of RBI is. And it also comes out with a priority sector. And for such priority sectors, RBI has decided to give a cheap rate of interest. Who decides the priority sector? RBI. And for such priority sector, interest rates will be cheap. Compare it to any other purposes. So these are the roles of RBI. Simple, anything and everything related to money. Who will take the decision? RBI. Not just taking the decision, it will also bring in stability in the economy with respect to money supply. stability in the economy from the fluctuations of inflation and deflation. It advises governments and commercial banks. It also represents government in international platforms. It comes out with a priority sector. The main intention is bringing in economic and financial structure to strengthen and develop the country's performance. So these are the roles of RBI. Next comes the most beautiful and my favorite topic of the entire chapter. Functions of. What is the shortcut to remember? B cube, C cube, D. What does this B cube, C cube, D stands for? First three functions starts from B. Bank of issue, banker to bank, banker to government. Next three starts from C. Custodian of foreign exchange reserves, clearinghouse, controller of credit. Last one D. It starts as developmental or promotional function. So what is this? Bank of issue. RBI is the only bank in India which is responsible to print and issue currency notes. Who will issue currency coins? Government of India, Finance Ministry, but only currency notes are issued by RBI. Except RBI, no other banks in India has a responsibility to print and issue currency notes. Point number 2, bankers, bank and lender of RBI is like Bap ka Bap. That means every banks in India comes under the control of. Every bank's books of accounts are maintained by. In case of any last moment emergencies for the bank, who will provide the funding facility? And not just for the banks, even in case of any emergency to the government, who will provide the funding facility? And all the government's accounts are maintained by RBI, whether it can be state government, central government or union territory. All the government's accounts are maintained by RBI. All the banks' accounts are maintained by RBI. At the last moment, if case of any financial emergency, funding for governments as well as commercial banks will be made by RBI. That is the reason it is called as lender of last resort. See there, not just maintaining the books of accounts of a government, it also makes payment. It also makes on behalf of government to all national and international institution. Loan will be taken by government, but repayment will be made by RBI. And it also advises on finance matters, not just finance matters, even on COVID was an economic issue. At that point of time, how much to spend, for whom to give compensation, for what purpose to give, what purpose not to give. Every advice is made by RBI to government for both central as well as state government. And also RBI can issue the loans to government wherein government has to repay within how many days? 90 days. Not just that, it also trades the treasury bills. Trades on behalf of whom? This concept was also called as open market operation in order to control inflation and deflation, not just coming out with the policies with respect to government expenditures and tax. Now RBI on behalf of government, when there is a inflation in economy, when there is more money supply, to cut down that, it sells government security. In India, the most trusted securities are government security. When it is selling the security, people would like to buy that. When they buy the security, the money is coming inside to the bank. Now people will give that money to the bank. That means money is coming inside. So by that, at the time of inflation, RBI sells a security. When there is a deflation, when there is less money supply, RBI will buy back such security, whatever it has sold. So it will sell and buy government securities on behalf of central government to control inflation and deflation. That is called as trading of treasury bills. This concept is called as what? Open market operations. Clear? So this was the first three B's: banker, bank of issue, banker to bank, banker to. Next, three C's. Which are the three C's? Custodian of. In India, whatever the foreign currencies are existing, such reserves are maintained by whom? So there are two main things why RBI maintains the reserves. Number one, to print currency notes. It will be kept as a backup reserve in order to print a currency note. Second one, for import-export payments. For all this international trade payments, balance of trade, balance of payment. For all such things, foreign currency reserves has to be held by the country. So such foreign currency reserves are maintained by whom? RBI. And external value of rupee, like exchange values gets fluctuated. In order to maintain the stability even in exchange value, that will trade the foreign currency. That will trade the buying and selling of foreign currencies to maintain the external value of rupee, to maintain the And under RBI, there is a FEMA, Foreign Exchange Management Act, that will regulate the foreign exchange currencies with external value. And even balance of payment comes under RBI. All those foreign exchange reserves are used to pay for whatever we import. Clear? And next C, second one, clearing. All interbanking transaction from one bank, funds should get transferred to another bank. Say I have given a check to one of my customer from my account to his account, the money has to get transferred. I have an account in Kotak Mahindra, my customer has an account in Canara Bank. In short, from Kotak Mahindra Bank, money should get transferred to Canara Bank. Like this, in a day, thousands of customers' transactions are there from one bank to another bank, money should get transferred. All such interbanking clearances will be taken care by RBI because it maintains the accounts of all the commercial banks. Next, controller of. This is what is the most important point. In an economy, we have to control the availability of a credit. Whatever money which is given in the form of loans and advances or money supply has to be controlled. If it exceeds, that leads to inflation. If it depletes, that leads to deflation. We need to maintain that stability of supply of credit or maybe money in an economy. To control such, there are two kinds of tools, qualitative and quantitative tools. Under quantitative tools, we have various list of elements. Number one, this is not the interest rate given by the bank for keeping money in your bank account. This is where people went wrong. What is bank rate? It is a rediscounting rate. What is it? Rediscounting rate. When a commercial bank needs a loan from RBI, they need to pledge some securities and then they have to take the loan. Suppose initial discounting will be done from customer to a banker. Suppose, for example, one of the customer wanted money. So let me say they have a bill of exchange. They will receive the money in a near future according to the date mentioned on bill of exchange. But there is an emergency. They need a money even before the due date. They will take that bill. They will go to the banker. They will get it discounted. Suppose now bank is in need of money. They can rediscount such bill with RBI. Such rediscounting rate is called as bank rate. Second one, CRRN, cash reserve ratio and statutory liquidity ratio. A portion of bank deposits which a commercial bank has to keep with RBI, that is called as CRR, cash reserve ratio. With bank themselves, that is called as SLR. For day-to-day banking operation, many people will come and withdraw, they will deposit, ATM transaction, DD. For various banking purposes, we need to keep a portion. Say, assuming we have received 100 rupees, this will be divided into three parts. Say 4 rupees is kept with RBI. Bank keeps 21 rupees with themselves. With whom? Bank. Remaining 75 rupees. This is used as giving for loans and advances. Like this, CRR is portion of deposit which is kept with RBI. SLR, portion of deposit which is kept by banker themselves. Remaining money is used to give loans and advances. Next, open market operation. Just now we explained buying and selling of government securities on behalf of central government to control inflation and deflation. Next, repo and reverse repo. Repo and repo rate, reverse repo rate. When bank is in need of a money, when a bank is borrowing the loan from RBI, when the bank is borrowing the loan from for a specified interest rate, for a specified, and such interest rate is for short term, repayable within 7 to 14 days. 7 to, that is repo rate. That means borrowing rate of commercial bank, or in short, when RBI lends loan, RBI lends loan to the commercial bank for a short term, for a whatever interest rate RBI charges to the commercial bank for a short term lending, that is called as bank rate or repo rate. Repo rate. Then what is bank rate? That is rediscounting rate. This is long term. This is, remember, bank rate is long term. Repo rate is short term. This is where most of them gets confused. Bank rate long term. Repo rate short term. Repayable within 7 to 14 days. Sometimes even RBI can borrow the funds. Or commercial bank, when they have more money with them, they can keep that excess money with RBI. For such, they will receive an interest rate. In short, that interest rate is called as reverse repo rate. Or in short, when RBI borrows funds from commercial bank, borrowing rate of RBI, reverse repo rate. Lending rate of RBI, repo rate. So by controlling these interest rate, that will fluctuate the availability of credit money with the commercial bank. If they don't want to give more credit facility to the general public, purposefully when commercial bank is borrowing money from RBI, they will increase interest rate. Now, commercial bank cannot give at a lesser interest rate to the general public. Even commercial bank starts charging higher interest rate. Now, no one will come forward to take the loan because already in economy, inflation is there. Already more money supply is there. We want to cut that down. So, this is what the tools are. Quantitative tools. Bank rate, CRR, SLR, open market operation, repo rate and reverse repo rate. Clear? These are quantitative tools. Next one. Fixation of margin. While giving loans and advances, the documents or whatever securities we take, we don't give the 100% value of security. For example, someone gets the document worth of 100 crore and he wants a loan of 100 crore. Will a bank give entire 100 crore? No. Only a portion of it will give, say 80%. Some 20% is held as a safety stock. What if we don't repay, like Vijay Mallya, if he absconds from the nation? So there is a security which has to be kept as a safety stock. That safety stock portion is called as margin of safety or fixation of margin. Who will fix that margins? RBI. And issuing of direction. Whatever the directions the RBI issues, all the commercial bank has to follow according to that, whether they like it or whether they don't like it. This is for the welfare of a society. What RBI is doing, you have to definitely follow. Credit rationing. Whatever this 75 rupee was available for giving loans and advances, out of the 75, how much for agriculture, how much for industry, how much for car loan, how much for housing loan, how much for education loan. Like this rationing will be done by whom? RBI. And last but not the least, moral suasion and direct action. If any commercial bank is not following the instructions of RBI, they have all the rights to take the direct action against such bank. Best example, Punjab National Bank incident, Yes Bank incident recently, where RBI has got the complete control to regulate them and also to take the direct action against them. Clear? So these were the second set of 3 C's. First set 3B, second set 3 C's. Last one is D, developmental or promotional function. There are a few places where RBI cannot directly involve. RBI cannot directly, it will indirectly involve. There are some organization that has been established for the development of so and so sector. For such developmental purposes, funding will be made by RBI. Best example, NABARD. For agriculture and rural development, NABARD funds. NABARD gets the funds from RBI. Exim Bank, Export Import Bank, Small Industries Development Bank of India. For all such developmental purposes, RBI will fund. All such funding institutions and developmental banks comes under the control of RBI. That is what I said. Wherever money is involved, RBI is involved, either directly or indirectly. So these are the concepts of RBI. Clear? Understood? Any specific doubt? Chalo, let's go for SEBI. Second one is Securities and Exchange Board of India, which is the apex authority to control dash market in India, capital market in India. So SEBI was established in 1988, but SEBI got its powers in under SEBI Act. Before SEBI in India, controller of capital issue had powers to regulate securities market under Capital Issue Control Act 1947. After 1992, this got scrapped and SEBI got the powers to SEBI Act. And the head office of SEBI is located in Mumbai. When you are purchasing any map, you can see these arrow marks. Upwards arrow mark north, leftwards arrow mark west. The northern office of SEBI is located at Delhi. South office, east office, the most important is west office. You will get confused with RBI branch office. Delhi, Mumbai, Calcutta, Chennai. West office you will write it as Mumbai. No, the west office is located at Ahmedabad. Head office is located at Mumbai. Clear? And there are 9 board of directors in SEBI. How many board of directors? This composition of 9 board of directors are important. 9 board of directors, 1 chairperson appointed by central government. Like how RBI has got a governor, in SEBI there is a chairperson. SEBI's chairperson is appointed by central government, and 2 more members are appointed from government ministry. One from Ministry of Finance, another one from Ministry of Companies Act, that is Administration of Companies Act, and 1 more member from wherever money is involved. RBI is involved directly or indirectly. And this is the important, this is where exam question comes. 1 plus 2 plus 1 is 4. Out of 9, 4 appointed. Remaining 5 members are experts in the field of finance, is appointed by central government. Out of that 5, 3 should be the full-time directors exclusively for SEBI. Only and only for SEBI. Clear? So, out of 5, 3 should be only for SEBI. Another 2 can also be the board of directors in RBI or IRDAI or NABARD, any other places. But 3 full-time directors are appointed for SEBI. So, these are the basic informations about SEBI. Established in 1988, got powers in 1992 under SEBI Act. Before SEBI in India, there was controller of capital issue, which was regulating securities market. Head office of SEBI Mumbai, north office Delhi, south office Chennai, east office Calcutta, west office Ahmedabad. 9 board of directors, 1 chairperson, 2 members from ministries, 1 from RBI, 5 experts from central government, out of which 3 should be full-time directors. Clear? There are 3 authorities of SEBI. See there, regulate as well as which market? Not only just regulating and developing, it has also come out with some rights given to the investors to protect them in the capital market. Protect the rights of investors in capital market. No one should cheat them. Arshad Mehta case. After that, it was a great example. Next, promote the development of capital market. Not just regulating, even we have to promote the development of capital market. And 3 function. This is the most repeated question in exam. Quasi-legislative, quasi-judicial, executive. And in order to raise any complaints against a security market, there are 2 appellate tribunal. How many appellate tribunal? Number 1, SAT, called as Securities Appellate Tribunal, which is existing within SEBI. It is a dash members body. This 3 members body is headed by Justice J.P. Devadhar. Suppose if we are not happy with the judgments given by the SAT, we can apply our case in Supreme Court. That is the superior most authority of India. Even for any security concerns, the next appeal lies with Supreme Court. Clear? So these are the 2 appellate tribunals. Next, third one and the most important topic of SEBI is powers of. It has got all the rights to approve the bylaws, not just approving the bylaws, even amend the bylaws. So SEBI Act clearly gives the power. You need not to come to the parliament once again to get the changes. You can only make some bylaws, and not just approving such bylaws, even you can amend such bylaws if required any changes to be made. Next, it also inspect the books of accounts of all the stock markets. They have to submit their books of accounts every 3 months once, every monthly once, like this rules are there. And not just for stock market, even for financial intermediary, for all stock brokers, intermediaries, even their books of accounts are inspected by SEBI. And it will compel certain companies to list their shares in 1 or more stock exchanges. So these are the powers of SEBI. In short, anything and everything related to securities market, who will come out with rules and regulation? SEBI. SEBI got its powers in 1992. Clear? Anything related to security market, who will take care? SEBI. Same way, anything related to competition culture, rules will be created by Competition Act 2002. Under Competition Act, we have established CCI, Competition Commission of India, wherein which in order to have a fair competition culture in an economy, we have established CCI. We have established when? In 2003. Under which act? Under Competition Act 2002. Okay, sir, from 2002 this act is there, but before 2002 is there anything related to competition? Yes, we had MRTP Act. Which act? MRTP Act used to take care about the competition culture in India. Under MRTP Act, there was MRTP Commission. These 2 got dissolved, and then we have established Competition Act 2002. What does Competition Act will do? Read it. See there. This is the act which is going to prevent anti-competition agreements, any kind of agreements created by anyone to abuse someone or to dominate someone or to create any unfair trade practices in India. That will prevent such things, and abuse of becoming number 1 and controlling the economy, such dominance, and regulates combination which can cause or likely to cause adverse effect of competition in India. Simple. Vodafone and Idea got merged together. Combination which can cause or likely to cause adverse effect of competition in India. Such things will be prevented by Competition Act. Under Competition Act, we have established what? CCI, Competition Commission of India. which has got perpetual succession and common seal. If you remember, I taught you this shortcut. CCI has got perpetual succession and common. LLP has got perpetual succession and legal entity. First alphabets are important here. Perpetual succession is common. CCI, common seal. LLP, legal entity. So this is the shortcut to remember. Clear? So CCA has got dash and dash, perpetual succession and. Okay sir, what will happen if there is a fair competition in an economy? Simple, customer gets a wide choice. If not from one person, they will go and buy from another person, and there is a fair competition in the market. Everyone gets an equal chance to sell their commodity. Not just that, because of competition, we will have inventions and innovations. Because of competition, everyone tries to reduce their cost, and there is also wide choice to customers. So in short, benefit is for common man. So for a common man, they gets the broadest range of goods and services at the most competitive price. And remember, CCA was established with the intention of creating fair competition culture in the economy and also to create welfare to the consumers. So CCI is a 7 members body. How many members body? And all the 7 members are appointed by central government, and the composition is 1 chairman and other 6 members. 1 chairman, and there are 2 types of competition. How many types of competition? 2 types of competition, direct competition and indirect competition. Remember, simple example, 2 different company A, company B, producing same goods and services, same goods and services, and even targeted customer is also. Best example, Pizza Hut, Domino's. 2 different company, same goods and services, pizza, targeted customer is also. That is called as direct competition. So what is indirect competition? 2 different company A, company B, different goods and services, different goods and, but targeted customer is same customer. Best example, petrol bike, electric bike, different company, different goods, targeted customer is same. That is called as indirect competition. Clear? Direct competition, 2 different companies, same kind of goods and services, targeted customer is same. Indirect competition, different company, different goods and services, targeted customer is same. See, authorities of CCA, whatever we just explained, same. Once again, we are repeating it. We need to create free and fair competition in the market. When there is free and fair competition, that encourages for innovation, that increases efficiency among the producers, and CCA also punishes the faulty people. When there is a fair competition in the economy for a customer, that is going to boost the choice and they get a improved quality for a reduced cost. It will make sure that goods are available in abundance in an acceptable quantity and affordable price. In order to get this all, Competition Act was established, under which CCI got established. So this is what the concern about CCI. Again, same repetition about objective, but 2 important points. We need to follow sustainable development practices. Same resources are used by all the competitors. You should also use them and also preserve them for future purposes. And you need to create a competition culture in rural and urban. You should make sure that that information about competition is reached to the people. No one should take undue advantage. No one should cheat anyone. Such kind of training should be provided regarding competition issues. So these are the 3 additional things we have to remember. Rest remaining things is same. See, to protect the interest of consumers, to ensure freedom of trade in market, to prevent dash competition, adverse effect of trade in India, and to promote and sustain fair competition in market. So these are the objectives of CCI. In short, anything and everything related to competition culture in India, who will take care? CCI. CCI is established under Competition Act 2002. Next, IRDAI. Anything and everything related to banking, who will take care? RBI. Anything and everything related to securities market, who will take care? Same way, anything and everything related to insurance market, IRDAI will take care. And that is the apex statutory body in order to regulate as well as which industry? Anything, right from giving the license to start the insurance business, suspending the license, renewing the license, dispute settlement, like how Securities Appellate Tribunal was there in SEBI. Same way, we have something called as complaint readdressal mechanism. Anything and everything right from start until the end of insurance, complete rules, regulation, development, safeguarding the interest of investors, everything is taken care by whom? IRDAI, and this was established in 1999 under IRDAI Act of 1999. And remember, in India, the maximum FDI allowed in insurance sector is 49%. Clear? And see the authorities. It is to protect the interest of policyholders, promote and regulate the growth of speedy and orderly growth of insurance industry for the benefit of whatever funds that we get in the name of insurance. It is used for a long-term funding for growth of a economy, and it ensures speedy settlement of insurance claim, preventions of insurance fraud and other malpractices through their grievance readdressal mechanism or machinery. So like how we had a SAT there, now we have grievance readdressal machinery that will take care about the grievance part. Clear? Next, duties of IRDAI. This point is really important. Section 14 of IRDAI Act will lay down the duties, powers and this is the most repeated question. Which section number? Section 14 of IRDAI Act comes out with duties, powers and functions. See there, right from issuing the license or renewing, modifying or any certificate of insurance, protecting the interest of investors, any dispute between the policyholder and intermediary, training the intermediaries and agents to know the benefits and how to communicate such benefits, even how to maintain the books of accounts in insurance sector, and also regulating A to Z. Everything is taken care by whom? IRDAI, which is the apex authority for insurance, established in 1999. Clear? This is the information about IRDAI. So that is what 4 institutions under regulatory body. Now let us discuss about funding institutions or developmental body. If you remember, I said after the independence of India, Indian government wanted to grow the economy in the path of industrial development, and in order to provide a long-term funds for industrial growth in India, during 1947, we didn't had enough banks which can give a long-term loans. So, in order to provide a loans facility for a long-term purpose, India established IFCI in 1948. IFCI stands for Industrial Finance Corporation of India. But this IFCI is no more a developmental bank. This IFCI today has been converted into NBFC, non-banking finance company under non-deposit seeking institution category. IFCI is no more a developmental bank, but which is the very first developmental bank established for industrial loan? IFCI. But now it has been converted into, now not just IFCI, even ICICI and IDBI. ICICI stands for Industrial Credit and Investment Corporation of India, and IDBI stands for Industrial Development Bank of India, where ICICI was established in 1955, IDBI was established in 1964. Now, these two has been converted into commercial banks. Now, whatever ICICI, private bank, that was a developmental bank established in India for industrial loan. IDBI was also same, but now these two has been converted into commercial banks. Clear? This was the history related to developmental banks. Now, under developmental banks, we'll be studying only and only about NABARD. So only 3 important information to be studied, but in ICA material they have given a list of information that speaks about everything about rural and agricultural development. So which is the apex institution for development of rural and agriculture? And that NABARD was established in, head office is located at, and NABARD helps for SHG. I hope you would have heard about this, self-help. This is for a rural poor woman. They will only create a group. They will only fund whatever savings they have. They will start some small business. Later, NABARD will help them through the bank loans by providing through SHG bank linkage programs. And NABARD acts as a refinancing institution for dash sector loan. Initial loans will be given by the banker. Suppose if any problem occurred, suppose any resolving has to be done, such refinancing of loan will be made by whom? NABARD. For which sector loan? Rural sector loan. So these 3 things are important. Apex institution for development of agriculture and SHG and refinancing institution for rural sector loans. By this, NABARD also comes to an end. There is only one small topic, compulsorily the question comes from this area where my students will neglect every single time. The concept name is point of contact business facilitator. One question for sure will come. They will give the definition of that and they will ask you to identify which kind of a business facilitator it is. There are 5 types of business facilitator considered as point of contact business facilitator. Number 1, freight forward. What is that? They will arrange shipment. That means transportation facility for a business houses to move their commodity from place of production to the place of market. They will arrange what? They will arrange shipment. Second one, business incubator. They help for young business. That means for startups. They help for in order to get all the necessary support, financial and technical services. Third one, business accelerator. No rule, only for startup. They will help for all kinds of business until they launch their products and gain the commercial success. Fourth one, financial consultant. They will consult you on various sources of finance, like where you will get short-term finance, where you will get long-term finance, what to do with that money, for what purpose you should use, for what purpose you should not use. Last but not the least, merchandiser, who helps the business getting their essential supplies, materials, and they will give a definition of any one and they will ask you to identify which of the following is so and so. Options will be like business accelerator, business incubator, financial consultant, merchandiser. They will give a definition and you need to identify which definition is that. Clear? So this is what is entire chapter 5 of BCK. And the most important thing is there is one question that is going to occur from the events, especially from these years. It starts from 1934. It starts from RBI Act 1935. RBI was nationalized. 1947 Capital Issue Control Act. Then further SEBI replaced it. 1948 Industrial Policy and even IFCA was established. 1949 Banking Regulation Act was established and even RBI got nationalized. 1951 Industrial Development and Regulation Act. 1955 ICICI. 1956 Industrial Policy Resolution. 1964 IDBI. 1969 MRTP Act. 1982 NABARD. 1988 SEBI was established. 1991 New Economic Reforms. 92 SEBI Act and SEBI was established in 1988 but SEBI Act in 1992. 1999 IRDAI and IRDAI Act. 2002 Competition Act. 2003 CCI and CCI got amended in 2007. So these are the important 18 to 20 years which you have to remember. One question will compulsorily come from that area. Clear? This is what is the chapter 5 of BCK. Clear? So we are finished with the discussion of chapter 5 of BCK. Now let us start with chapter 4. Chapter 4 speaks about government policies for business growth. Now in this chapter we will be completely speaking about policies of government. What we will be speaking? Policies of government. So what are those policies of government? What do we call it as? See there, whatever government chooses to do or which should be done and which not to be done, which is for the welfare of a society and to achieve the organizational goals, that is called as public policy. What is that? Whatever government chooses to do or not to do. Smoking in public place attracts penalty. It is banned, not to do. Even a pillion rider should wear a helmet in a bike, to do. So which has to be done and which should not to be done. Both includes in a public policy for welfare of whom? For the welfare of society and also to achieve organizational goals. See, I have given few examples here. Even pillion rider should wear a helmet, ban on sale of crackers in Delhi, ban on consumption of alcohol in Gujarat, smoking in public place attracts penalty. So these are few examples. And remember, every public policy is an essential condition. That is called as sine qua non. Whether you like it or whether you don't like it, you have to compulsorily follow them. So every government policy is what? Sine qua non for every field of business. For every, it can be a legal, it can be tax matters, it can be business constraints, that is restrictions, finance matters or related to any policies of government. One should be aware about what to be done in this nation and what not to be done in this nation. And from every nation to nation, policies will change. It is not the same. As I have given an example, In Bangladesh, you can also import second-hand cars and you can sell it. But in India, you can't do it. Like this, from one nation to another nation, policies keeps on changing. And also the developed nation has a different kinds of a policy. BRICS nation has got different kinds of a policy. And especially China and North Korea has got completely a different kinds of public policy. Like this, from nation to nation, public policy keeps on changing. So in this chapter, we are dividing the entire unit into 4 segments. Number 1, historical sketch. Number 2, spectra of government policies for business. Number 3, macro policies for business conduciveness. Number 3, economic change process. This is where LPG comes into picture, and the new element we will be discussing, that is FDI and FII. So the entire chapter is broke down into 4 different parts. Number 1, historical sketch. Under historical sketch, it is further subclassified into 3 elements: ancient India, India under British rule, India since independence. Now let us get started. The very first one is historical sketch, ancient India. The policies are not new to India. Even during the British rule, the policies were there. Even before the British rule, that means under kings and queens, there were policies existing. One such policy which we have to remember is Chanukya's Arthashastra. Chanukya's. Even today in the 21st century, we consider this as a master work which is created by Chanukya, where it has outlined as a king how you have to rule your nation, what kind of policies to bring in for the peace and harmony, or might be for the welfare of your dynasty. Like this, all such policies were created. And not just that, in the age-old universities of India, the researches, or let me say the research used to take place about the policy, like universities of Takshashila, Vaishali, Nalanda. Like this, there are many kings and queens who have adopted the policy, like Ashoka the Great, and even under Delhi Sultans, Alauddin Khilji, they were the one who introduced the land reforms, tax reforms. And not just in India, even in outside the Indian context, like Greek cities and Roman Empire had Plato and Aristotle. They were the creators of policy. Like this, policy is not a new context to the word, it is a very old context. Next, policies under British rule. Now, as we all know that they were ruling the Indian country not just for the sake of benefit of Indian citizens, for their own self benefits. So all these Britishers, whatever policy they brought in, that is not for the benefit of Indian ruler, that is only for the benefit of foreign rulers. And the person by name Dadabhai Naoroji has outlined a book by name Poverty and Un-British Rule in India, under which he clearly explained how Indian wealth was drained by the Britishers. Same way, they were the people who introduced a zamindari system in India. Later, after the independence, we abolished. And the one important thing which you have to remember is managerial agency system. Only some wealthy, rich Britishers were able to build and control the vast industries and business empires in India. So these are the policies what they created, and whatsoever infrastructure that they have created, that is for the benefits for foreign rulers, not for the benefits of Indian citizens. Next comes India since independence, the story which I gave. So after the independence of India, we adopted mixed economy only for the namesake, but the policies were socialistic in nature, and complete control was given to public sector enterprises. We wanted to grow and develop the nation in the path of industry, for which we have established industrial policy statement 1948, and in the year 1950 we adopted constitution to India, that is Republic Day, what we celebrated. And we wanted to grow the nation in the path of industry, and also we adopted Planning Commission of India. The Planning Commission of India will plan for the 5 years what to be done in India, what is our concentration. Based on that, we will perform. And the very first 5-year plan was launched in 1951, and we brought in some changes to industrial policy statement of 1948, and we called it as industrial policy resolution 1956. India used to follow restricted trade practices. We never used to allow any multinational companies to enter India and perform the business. We wanted to grow our domestic industries in a protective environment. So whatever policies in the name of mixed economy we adopted, that is giving complete dominance for public sector. See there, independence from the colonial rule in 1947 made the way for restructuring business growth in India. Rather than choosing capitalistic or socialistic economy, India chose mixed economic path, but dominated by public sector enterprises. Each and every control was given to whom? Public sector enterprises. So all this policy which was adopted, and the host of labor and industrial policies was brought in, nowhere adopted to India. This lasted for 3 decades and then problems started. Then problems have started. Then in the year 1991, we adopted new era of economic policy called as new economic reforms by including liberalization, privatization, globalization. So this is the difference. In the middle 50s, how we were, and after implementing LPG, how we became. Nature of economic system, namesake mixed economy, but dominated by public sector. But now, no doubt mixed economy, but more of capitalism in nature. Economic governance, planning commission was doing 5-year plans. Entire economy was operated based on planning commission, but now based on demand and supply, market mechanism. Economic orientation, it was a closed economy. We never allowed any foreigners to come inside India, but now it is a, because of globalization. Role of government in business. Government used to have a commanding rights, especially the public sector undertaking, but now we are giving more and more importance for privatization and also for foreign investments. Next, role of government in private business, completely regulated and controlled. For each and everything, licensing was there. Compulsory, you need to get the license, and complete rules and regulations was made by government. But now liberalization has been made in regulation, not that harsh rules in regulation. Clear? So this was historical sketch of policies in India under kings and queens, under British rule, and after independence. After. Clear? So next, spectrum of government policies for business. That means in which all phases the policies of government is there in a business. To be frank, in every stage, right from starting the business until you get registered, whether it is a partnership or company, in every phase of business there are rules, regulations and policy. Okay sir, after registering, is the policy done? Can I operate on my own? No way, you have to take. We are not harming the environment in the name of noise pollution, sound pollution, air pollution, nothing. After that, even to conduct the business there are rules and regulations that comes under. Now CCA will come into picture. Okay, after that, am I free to operate on my own? Definitely not. There is something called as consumer laws. Consumer Protection Act is there. Because of you, if there is anything goes wrong to the customer's health or any kind of damages happen, then you are solely responsible. All such things has to be dealt in. Okay, I don't want to operate at all. I want to close down. Even to exit, there are rules and regulations and policies. Insolvency and Bankruptcy Board of India, IBBI comes into picture. In short, right from starting the business until you close down. Starting, operation and close down, in all the phase of business, in all the phase of, there is a policy. Whether you like it or whether you don't like it, you have to compulsorily follow the policies. And this is not just the policies implemented by the central government. There are also policies implemented by both, has to be followed. It is not like, oh, I will only follow the central government policy. No, if you're operating in Karnataka state, you should also follow the Karnataka state government policies also along with central government policy. So in every field of business, in every stage of business, there are, right from your start until you close down, in every area, in every field, there are policies implemented. It doesn't matter whether you like it or whether you don't like it. You have to definitely follow them. So such kind of policies, that economic policies are of how many kinds? 2 kinds. Already I explained. This is a macro level. One is fiscal, created by government. Second one is, this is created by central bank of a nation. And there is also policies from sector wise. Every individual sector has also got policy. Agricultural policy, industrial policy, service sector policy. For that, the new addition is foreign trade and investment policy. Post 1991, we started allowing foreign companies inside India, and not just foreign companies, even foreign funds inside India. So this is the highlighted one of this chapter, FDI and FII. First, let us understand this. This is the last topic of the chapter, but let me explain it now itself. So what is this FDI and FII? Simple 2 differences are there. So FDI means, listen to this very carefully. When a foreign funds are coming inside India and they are investing on infrastructure of the nation, investing on, that is called as FDI. So rather than coming and putting on infrastructure of the nation, can I come and invest on stock markets of India, capital markets of India? Yes, that is called as FII. That is called as. So 2 kinds of investment. Either you come to India and invest on infrastructure, FDI. You come to India and invest on capital market, that is FII. Okay, what is another difference, sir? When you are investing on infrastructure of the nation, would you like to have a management control? Would you like to be the owner or just simply invest and leave it? Definitely, I need to be the ownership. So I have a major stake in. Over there, when you are investing on capital market, when you are investing on, you are just a profit oriented. You don't want a management control. You are speculative in nature. You are looking out for a purpose of profit making. And moreover, if you are investing on stock market, whenever you don't feel like, you will take out your money and you will leave. Either it can be short term or long term. But here, if you are investing on infrastructure, definitely it will be a long term investment, and you are completely investing from scratch, land, machinery, plant, everything. That is called as primary investment. This is called as, that is secondary investment, because already setup is there. On that setup, you are investing on a capital market. So FII is a secondary investment, FDI is a primary investment. And the most important thing, if you are investing greater than 10%, that is FDI. If you are investing less than 10%, FII. Clear? And the biggest impact will be happening in the country for employment and GDP. If you are coming to India and investing on infrastructure, you will only bring in your technology from your nation. In India, you will use the local manpower. That will increase employment opportunity in India, and you are producing inside India. So that will also improve the GDP of India. So FDI will impact on employment, and if you come and invest on infrastructure, it will definitely impact here. But if you come and invest on capital market, that will not impact on employment and GDP. Clear? That is another difference, and the most important one. FDI will fill the gap between domestic savings and circular flow of money, CMU. Whatever my households are created as a savings, that savings is invested in the business in the name of loans and advances. Suppose in India, we need some 10,000 crore rupees as investment this year. But my households have created 7,000 crore as savings, 3,000 crore shortage. Now, if I allow FDI, that 3,000 crore rupees will be invested by some foreign company inside India. That gap, whatever shortage was there, that will be fulfilled by FDI. Clear? So FDI can happen through two different ways. One, if you want to enter India, it will be through automatic route approval. If not, government approval. They have given a list of industry which is considered as priority in India, but unfortunately we don't have. Suppose if you are planning to establish such industry in India, you are free to come inside India. There is no restriction. There is no government permission required. Enter India, register under Companies Act, start operating. Suppose if the business what you are planning to do in India is not given in automatic route approval or not mentioned in automatic route approval, then you should take the permission of government. Only if government agrees, then only you can enter India. Okay, now I entered India. What is the way of performing business in India? Two types. Number one, through a subsidiary company or through a McDonald's, KFC, Subway, all these are franchisee models. Subsidiary company, under an Indian company, I will be investing. Best example, insurance. In India, maximum allowed FDI is 49%. Remaining 51% is invested by an Indian company. Bharati AXA Life Insurance. Bharati is Indian, AXA is not Indian. ICICI Lombard, ICICI Indian, Lombard is not a Indian. They will invest in India only 49%. Rest 51% is invested by an Indian company, and under Indian company you are a subsidiary. In India, FDI is not given 100% for all the business. For few business it is 26, for few it is 49, for few it is 51. Only for few it is 100% subsidiary. 100% you only come, you only invest, you only operate. One such example was insurance, it was 49%. And same way, even there are few business where FDI is completely prohibited. FDI is completely atomic energy, lottery business, gambling and betting, business of chit fund, nidhi companies, and agriculture is also prohibited. But few allied activities of agriculture are allowed, like floriculture, horticulture, development of seeds, animal husbandry, pisciculture, cultivation of vegetables, mushroom, under controlled condition. So these are allowed. And plantation is not allowed, but tea plantation is allowed. Clear? Agriculture is not allowed, but allied activities of agriculture are allowed. Plantation is not allowed, but only tea plantation is allowed. Same way, housing and real estate businesses not allowed, but to some extent, township construction of residential plots, bridges, to the extent specified is allowed. To the extent specified is, but in general sense, housing and real estate is. And next comes transferable development rights. Getting the plot, developing that plots, converting into sites and then selling it to someone. Foreign company cannot do this. Only Indian company can do it. TDRs are not allowed. Manufacturing of tobacco and tobacco substitutes are not allowed. These are the 9 categories where FDI is prohibited. They are not allowed. Clear? So this was the concept of FDI. Next comes FII, foreign institutional investment. These are the institutions which are registered abroad. Some other nation's institution which they have registered in their home country, but they will never invest in their home country. They will invest in other nation capital market. They never invest in their home country. Why? Because they want to take the advantage of other nations growing capital market. My intention itself is to invest in other nation. Once that funds reaches peak position, I will take out that fund. I will invest in some other nation capital market, but I will never invest in my home country, and it is an investment of less than. I don't have an intention of. Either it can be a short term or my intention is opportunistic and speculative. My intention is making profit and it will never impact on employment and GDP. And FII is also called as foreign portfolio investment. It is the flow of financial capital in Indian stock market, pension market and mutual funds. Clear? This is the broad category of FDI and FII. Now when we speak about FDI, there are 2 kinds in it, inflow and outflow. Inflow means we receiving money from other nation. Outflow means people are investing some other nation's infrastructure. Objectives are simple. Why? I need to have a major stake of ownership in the target country, and I need to expand my business in that target country. That is the intention. Whether some other company coming to India or we going to some other nation, this is the intention. Inflow and outflow of FDI. Inwards FDI and outwards FDI. So this is what is foreign trade and investment. That is what the last category which is considered to be important under sectoral management. Primary sector, that is agriculture. Secondary sector, industry. Tertiary sector, that is service sector. Now the fourth and the most important one was foreign trade and investment policy. Under that we covered FDI and FII. Clear? So next, macro policy indicators for business conduciveness. That means in order to conduct the business, this topic is little more interesting. How should the macro factors should support us? As a businessman, how these factors should be supporting to you? Now simple, GDP. Only when GDP of a nation is increasing year by year, I am interested to come and invest in India, because there is a growth potentiality. If GDP is increasing year by year, that means they are producing more and more. Why are they producing more and more? There is creation of demand more and more. So there is a growth potentiality in the nation. So if GDP is increasing, as a businessman, I will be interested to come and invest more. What should happen for inflation? There should be a slight inflation. See, that means as a manufacturer, I am not ready to sell the same product. Say I am selling this water bottle for 100 rupee. 5 years ago was also 100 rupee, now also 100 rupee. Am I excited? No. Year by year, there should be a slight increase. Only if there is a slight inflation in an economy, I am interested, because prices will be more, profit will be more. But if inflation is higher, that is not slight, it is more than slight, then that is not good in an economy. That will lead to a instability in an economy, and economy starts decreasing. Performance in economy starts decreasing. Only there should be a moderate inflation. What is it? So the word moderate is most important. What should happen for tax rates? Decrease. Only if tax rates are less, as a businessman, I am interested to come and produce. Interest rate should also be. Remember, interest rate and tax rate goes hand in hand. Every time I explained about it. Government expenditures and tax, fiscal policy, monetary policy. If tax rates are low, I am interested to come and produce more, and I am interested to invest more and produce in India. If major chunk of my income has to be paid in the name of tax, I am not interested. Next, even interest rate. Only if interest rates are less, I will come, I will borrow the money from bank, I will invest. If interest rates are more, my cost of production and my cost of investment will become more. I am not interested. Same way, next, exchange. There should be slightly increase. That means $1, if it is 70, this $1 should become 75. What will happen? Now this will increase our exports. Say I was exporting one bench for $1. I used to get only 70 rupee. But now for the same one bench I will get. So exports will. But my imports have become costly. Earlier for $1, I used to pay only 70 rupees. Say I used to import a lion dates, dry fruits. One packet of lion dates was $1. I used to pay 70 rupees, but now it has become, oh, imports have become costly. I will not import. My imports will decrease. Rather than importing, I will buy it from my local market only. This is called as import substitution. What is it? Import substitution. Rather than importing, I will buy it from my local market. So this will encourage for more exports and it will reduce the imports. That is what every nation wants to achieve. More exports and less imports. This will happen when there is a slight increase in exchange rate. Again, moderate increase in exchange rate. If exchange rate goes beyond control, then domestic currency is losing value, foreign currency is gaining value. That is not good to an economy. Only a moderate increase. Only a moderate increase. So, moderate increase in inflation, moderate increase in exchange rate. GDP should increase, tax rate should decrease, interest rate should decrease. This is the conclusion. Clear? So, I have given the notes. You can read it over there. Whatever I just explained, same things are there. I hope you guys have written this. But especially when we are speaking about exchange rate, this last paragraph is important. We call this concept as tariff jumping FDI. What is this? When we are exchange rates are increasing little bit, we are exporting more and more. We don't want to import. Imports have become costly, but still there are few people, even though if it is costly, I want to import. In such a case, purposefully government will increase the tax rates. That is called as tariff walls. Now what happens if any nation has to send their goods inside India? That becomes costly to Indians because government has also increased the tariff walls. So what will this country do? They will play smart. They will only come to India. They will produce inside India and they will export from India and also they will sell it in India. It is like ek pattar pe do nishan. Simple. One kala ladaki. Henge by increasing the tax rate, by increasing the external value, automatically imports will stop. That means foreign companies, rather than sending their goods, they will only come to India. That means FDI investment is coming. That will improve my employment and GDP. Another way, they are also selling inside India and from India they are exporting. So this is called as what? Tariff jumping FDI. Clear? And while analyzing this concepts, we are only taking economic aspects. We are not considering non-economic aspects. Like what? COVID. COVID was a non-economic aspect. Okay, according to you, GDP will increase, moderate increase in inflation, moderate increase in exchange rate. I reduced tax rate, I reduced interest rate. COVID came up. Did you do business? Did you perform well? Not just COVID. Religious wars are happening in the nation. Hindu, Muslim, Christian, between them. Socio-cultural factors are getting affected. Political instability is there in the economy. Now what you will do? That means we are analyzing only economic factors. We are ignoring non-economic factors. That is one other drawback. And we are considering that in economics, many things as constant. There is no rule that customers' taste and preferences to remain constant, demand to remain constant, or inflation to remain constant every time. So we are analyzing things as constant and then only we are operating here. So that is another drawback what we have while assessing macro factors. While assessing micro factors are considered to remain constant. Demand will be same, supply will be same, cost will be same, constant, technology remains constant, no perfect substitutes for fixed factors. Like this. So we are analyzing by making things as constant. Clear? So that is what macro policy indicators for business conduciveness. And now sir, okay, we are speaking about so much about policy. How are policies created in India? So these are the procedures in which policies will be created. Remember, a concerned ministry, a concerned is responsible to create a policy. They are responsible to create what? So remember, a concerned minister or a concerned ministry will be responsible. For example, we need to bring in changes in education system. For example, COVID, we can't perform a normal set of examination. We will make it as MCQ online. Okay, who are the people who gets affected because of this? Number one, teachers. How do they set the question paper? How is the evaluation pattern? Should I make students to come down from their hometown to write just exam in Bangalore or to their examination centers where they have registered? Or should I give an option as in their own city only they can write? Is it from their home? Or should I make them to come to the examination center, computer labs and sit and write it? Like this, there are some problems. I need to understand the ground reality. Then only I can implement it. So there are steps and procedures to create a policy. Which are those? Number one, see there. The ultimate responsibility for policy formulation lies with concerned or concerned minister. Such concerned ministry or minister will not take the decision alone. They will work along with committees, commissions and institution. Now what will this committee, commissions and institution do? They will check the ground level reality. They will meet the stakeholders, they will discuss with them, and then finally they will draft the policy. Now such drafted policies are left to the public domain. That is where all Jorka Jamela starts happening. Oh, we don't want this. Hey, take it out. Farmers Bill, NRC, CAA. That is what happened. So we will start receiving comments, criticisms, and suppose if any changes is required, then we will changes will be made, and then finally the policy will be implemented, and thus impact is felt. And such implementation can happen through several ways. First only for Bangalore, next only for Karnataka, next only for South India, next it will be applicable to entire India. So policies can be implemented through several stages or several phases. Clear? So this is how the policy will be created. Policies are who is responsible? Will the concerned minister or ministry does the policy on their own? No. They will work along with commissions and institution. What will this committee, commissions and institution will do? They will check the ground level reality by meeting the stakeholders, by discussing with them. Then only the policy will be drafted. Such drafted policies are left to, and we receive comments, criticisms, and then finally the policy gets implemented, and impact is implementation can also happen through several ways. Clear? Okay, this is how the policy gets created. What all kinds of policy do we create? There are 4 kinds of policy. How many kinds of policy? Number 1, protective policy. This is what India did after independence. We closed the gates of an economy. We never allowed any foreigners to come inside India. We were protecting our domestic producers from national and international competitions. That is what protective. See there, it aims to provide protection for domestic market from international to the business. That is what India did in the mid 50s to mid 80s by restricting the multinational companies to enter India so that the Indian firms can grow in a protective environment. Second one, restrictive. As the name itself is saying, restricting. My intention itself is to bring a barrier or a curb on business by saying not to do that, not to do this, you should be like that, you should be like this. Best example, CCI. In India, earlier we had MRTP Act. By scrapping this, we came out with Competition Commission of India. That will take care about restrictive policy. Third one, regulative. Already we discussed chapter 5, regulatory policies, RBI, SEBI, IR, DAI. These are the example. They will come out with rules and regulation for that industry. According to that rules and regulation, the entire institutions has to work. See there, they will set up an institution for that industry. They will come out with rules and regulations to perform. If anyone is deviating from that, from the set rules and regulation, they have all the rights to take the direct action against them. So that is regulating policy. Last but not the least, what is that? Facilitating or developmental policy, wherein which India wanted to grow the nation in the path of industry, for which we wanted to concentrate more and more on MSME, micro, small and medium enterprises, especially those industry established in rural sector, because in India the predominant activity was agriculture. Agricultural employment will not be there throughout the year. Only during monsoon season there is an agricultural activity. Of the monsoon season they are unemployed. To give them an employment opportunity and at least to get some minimum wages to have a decent standard of living, they should get an employment opportunity. For that, we want to establish more and more of micro, small and medium enterprises in rural sector. For that, we will identify a person. We will only impart a training under NSDC, National Skill Development Corporation, and we will only provide the loan facility under ICIC. So this was established in order to develop what? Develop MSME, micro, small and medium enterprises. Clear? This is what are the 4 different types of policy. Now let us move on to the last topic of this chapter, that is economic change process. Especially 1991, we adopted LPG. India used to follow restrictive trade practices. Now we are scrapping this by implementing new economic reforms, liberalization, privatization and globalization. We have to completely uplift all those restrictions and barriers what we had for private sector as well as foreign capital or foreign companies entering India. Now the liberalization is made and importance is given for private as well as foreign capital. So whatever I discuss in liberalization, privatization and globalization, that holds good from an industry point of view, from a dash point of view. So remember, the very first one is liberalization. That means restrictions has to be reduced. Liberalization has to be made. We need to reduce all such barriers which has been included for Indian rules and regulations. See there, it refers to removal of trade barriers including and harsh policies on government. Like which are those harsh policies of government? Like dismantling of licensing, and for each and everything licensing and permission was there earlier. Now dismantle that, deregulate. Regulations was too much, strict regulations was there. Now reduce that, deregulate, easing of approvals, systematic loosening and legislative and administrative control over private business, especially on private business. That is, in short, it is the systematic process of enlargement and of freedom for. So which are those freedom that has been given to private sector? Have a look here. What are the changes that took place in industrial liberalization? Number one, as I said, under industrial policy statement and industrial policy resolution, a list of industry was reserved only and only for public sector. That was how many industry? 18 industry. Now such 18 industries have been brought down to just 3. Which are those 3? Defense, atomic energy, railway. In reality, at the moment, now it is only and only 2 or 1. 1 atomic energy. Now even railways are open. Defense, FDI is allowed. Clear? Next. Industrial licensing was reduced. Earlier, for each and everything, licensing was mandatory. But now, only for few hazardous and environment sensitive industry, licensing is mandatory. Which are those few hazardous and environment sensitive industry? Alcohol manufacturing, cigarettes, tobacco and tobacco substitutes, industrial explosive, aerospace, drugs and pharmaceuticals. Only for these industry, licensing is mandatory. Licensing is. For others, licensing is not mandatory. Earlier, MRTP Act was existing. We scrapped that and we replaced it with Competition Act. And the most important, earlier from 1970s, 800 items was specifically reserved to small scale industry. Only the small scale industry can produce this 800 industry. There were few products like garments, shoes and toys which had really high export potential, but these small scale industries were unable to produce in bulk and exported. They failed to do it. So we scrapped this 800 list of items only and only reserved for small scale. Now anyone who has a potential, you can produce and you can export. So de-reservation was made. See, these were the 3 main things which we de-reserved. See there, policy prior to 1990 was characterized by host of on private, like what? Reservation of large number of items only for the requirement of obtaining licensing permission was there for a private organization, and reservation of items exclusively for small scale. These are the 3 major changes what we brought down under industrial liberalization. Industrial. So in short, removing all those restriction trade barriers on the private sector is called as liberalization. Clear? Because of doing so, we have also encouraged private sectors in India and also FDI and FII inside India. And not just that, the major kickback has been started to various sectors. Same way, various advantages was given. Fast growth has been also made for banking, insurance, telecom, automobile, consumer durables and FMCG. And especially this e-commerce and mall culture was happened just because of liberalization. Clear? So second one is, so taking the control from government and handing over to the private is called as privatization. The other way around is nationalization. From private to government, RBI got nationalized. We explained. What is privatization? From government, now the control is going to private. That is called as privatization. So the transfer of ownership from public to private is called as privatization. This can happen for both profit as well as loss-making organization, non-profit organization. And these are few blah, 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 which is given. India used to face so problem. Privatization was not new. Even under British rule, we have done. Even before also, we have done all such basic information. See here, under the Prime Ministership of Margaret Thatcher, British coal mines was privatized, and few sectors of national health services, education services also under British rule itself. There are 4 types of privatization. How many types? Number 1. It is as simple as, that is what government is doing even today by giving tenders. What is that? Government wants to construct roads, bridges and dams. Government will outsource the work to private. Private will perform the work, but who is the owner? That is what is delegation. Government keeps hold of responsibility and private enterprises handles part or entire delivery of goods and services, either through tender or franchising. Jan Ayush Kendra, Nandini Milk Parlors, all such things are franchisee models. That is a government based, but private people will perform the activity. Next, divestment. When you are pronouncing, observe, dead. That means major stake of ownership is sold to one or more private organization. That means more than 51% stake is sold. Disinvestment. Only a portion of control is given to a private enterprises. Say only up to 49% is made. Only up to 49% is made. Only a portion is sold. Disinvestment. Major stake is sold. Next comes displacement. What is it? Private enterprises expands and gradually replaces government entity. You people are the example. Where did you study? Private schools and colleges or government schools and colleges? Your parents? When you are not feeling sick, where will you go? Private clinics or government hospitals and government clinics? Your parents. So earlier people used to choose only government, but slowly people are not choosing government. Everyone is choosing. That is called as displacement. It is the slow process of privatization. Clear? These are the concepts of privatization. There are 4 types of privatization: delegation, divestment, disinvestment, displacement. Clear? Last but not the least, what is that? Simple. Treating the entire globe as a one single market with no more barriers on imports and exports of goods and services. India, you are following restrictive trade practices. No more restricted trade practices. Entire globe is a one single market. Remove all those restrictions on exports and imports of goods and services. That means, in short, lifting up of all the trade barriers is called as globalization. Clear? This is what is chapter 4, government policies for business growth. Clear? So we are done with chapter 5 and chapter 4 of BCK. Now let's get started with chapter 1. Introduction to business commercial knowledge. So whatever economics basics we studied, same concept but in a different approach. Human ones are. But we can't satisfy all our wants. Why? Because limited resources are there. Same concept, now we go with a different approach. Like what? We need to satisfy our unlimited human wants. For that, we need to consume goods and services. So in order to consume goods and services, we need to pay for the same. We don't get it for free of cost. So in order to pay for the same, we need to work in order to earn income. Such income will always represent purchasing capacity. It's like a reverse approach. Only when we indulge ourselves in a work, we earn income. Through that income, we buy goods and services, which in turn satisfies our human wants. And income always represents dash. Income always represents purchasing capacity. Clear? And in order to either create income or if not to create savings, that is dependent on business and commerce. What is commerce? All those supporting activity to business. When we are conducting business, we take care about banking. We also need advertisement, transportation. All those supports business is called as commerce. Either by conducting business or either by conducting commerce, we create income or we create. So the process of creating income and savings is dependent on dash and dash. And we know that every business activity is an economic activity, dash activity, which is done with the intention of earning money or money's worth in return. Already we have discussed even upon the same in economics. What is economic activity? All those activity which will result in either money or money's worth in return to attain livelihood. That is called as economic activity. What is non-economic activity? All those activity which is done out of love, hobby or affection without having an intention of getting money or money's worth in. That is non-economic. If I need to earn income, that means money or money's worth, we should indulge ourselves in. So such economic activity can be either production, consumption, distribution or exchange. So in short, whatever income we get, we spend on buying goods and services. We don't spend the entire income. Even a small part is also saved. Clear? And next concept is domain of BCK. So it says that the concept of business as a commercial knowledge is very vast. That means the way of conducting business is not an easy one. It is a very vast. Like what? It includes manufacturing, trading, transportation, warehousing, banking, advertisement, and we can also do wholesale business or retail, local business, national business, or door-to-door sales, street vendor, bazaars, online. Like this, we can perform any kind of activities in a business. It is very vast. It is very. Then what exactly does the word business refers to? Either we produce or purchase goods and services with the intention to sell and earn. So it is not just vast, it is also dependent on other subjects. When we are conducting the business, we also need a knowledge of accounts, finance, law, economics, ethics, history, and marketing. So when we are conducting business, we are not independent, rather we are. And we borrow several concepts and strategies from other subjects. And it is also expanding and evolving. That means the way of performing business keeps on changing every now and then according to the changes in. When trend changes, the way of performing business will also. If not, we will become like Nokia. Now no one prefers Nokia. Why? They didn't change themselves. They were sticking into the same kind of a business and same kind of a cell phone models. They didn't upgrade it themselves. So people didn't like that and people switched over to XYZ. And earlier I used to give this Ola and Uber auto example. Now that has been banned. No more example is valid. Now within a click of a button, we used to get Ola, Uber as an auto, we will board there. If not, you go there, wave your hand, he will say 100, you will say 50, bargaining, all those hangamas used to happen. So whenever technology is implemented in business, the way of performing business is also changed. And whenever the trend changes, the performance of business will also change. So this is what the domain of BCK speaks about. Number one, it is very vast. It is derived from other expanding end. And now, as a chartered accountant, why should we also have a knowledge about BCK? Simple. Boss, my responsibility is to come out with true and fair accounting report of an organization. In order to come out with true and fair reporting and to conduct the audit effectively and efficiently, first, I should know the difference of business whose account we are preparing. One will be into XYZ business, one will be into ABC. Like that, one is into mining, one is into educational institution, one is into NGO, one is into some other electric batteries and cells. Like there's different kinds of business. Accounts preparation is not same for everyone. It is different. First, I should understand the difference of business. Then only I can conduct the audit effectively and efficiently. Not just that. There are various business that is guided with certain laws, rules, and where every field of business should follow it. I should make sure that my clients are following such rules, regulations, and laws. So in order to instruct them, first I should have a perfect knowledge of the same. So that's the reason as a chartered accountant, we should also know what is the knowledge of business that we should possess to guide our clients, then only we can guide them, then only we can able to make their business to run in a successful way. Clear? This is what importance of BCK for a chartered accountant. Already we discussed about human wants, economic and here the one important element is every non-economic activity has got an economic dimension. That means whatever time, money and resources we use to conduct a non-economic activity that could have been used to generate a economic activity. Clear? So which activity is important? Economic or non-economic? So when we are indulging ourselves in an economic activity, we should also understand what are the characteristic features of economic activity. Point number one, the intention of carrying out an economic activity is to generate income. So my income is always representing what? Purchasing capacity. So by attaining income, I can purchase goods and services which creates a livelihood. In BCK, there are two types of income. Number one, earned income. By using a skill and talent of a person, if he generates an income, that is called as earned income. Shashi Kiran, now using skill and talent and teaching to the Advait students. So that is earned income. Second one is capital or property income. By letting out a property or money to others, if I receive any interest income or a rental income, that is capital or property income. The same income in economics, we call it as rewards to factors of production. Land expects, labor expects, wages or salary, capital expects, organization expects. So income can be either received in the form of money or money's worth. That is nothing but cash or kind. Point number two, that always leads to production. Economic activity leads to? It is the process of adding utility to the subject matter to satisfy the human wants. It is not just converting raw material into finished good. Without the help of a manpower, raw material cannot be converted into finished goods. Clear? So goods and services are produced and also offered for self-consumption and also for market. Whatever we produce, either we consume self or either we offer to the market. Henceforth, supply side of the economy is called as. So production represents dash side of economy. Income represents dash. Point number 3, consumption. Listen to the statement very carefully. Production will take place because of. That means only when people demands it, then only we produce it. If people don't demand for the product, we don't produce. So goods and services are consumed by spending. So hence short, supply side of the economy was production, demand side of the economy is. And fourth, last but not the least, circular flow of CMU. Yesterday we discussed creation, mobilization, utilization. Who creates a savings? Households or individual? Who mobilizes savings? Banks, financial institutions and stock market. Who will utilize the savings? Corporates and governments will utilize the saving. Due to the process of CMU, household saving is converted into business investment. So those were the characteristic features of economic activity. Now, business as an economic activity, let us understand. There are 3 perspectives. How many? Broader perspective, medium perspective, narrow perspective. How many perspectives are there? Broader, medium, narrow. What is this broader? We know that every business is a dash activity. Either they themselves indulge in production, consumption, distribution, or whatever they are indulging themselves, either they do it in industry level, trade level, or industry is a group of firms with a similar activity. Now all those educational institutions, for example, MES College, Sheshadripuram College, KLE College, every individual is a firm. Everyone are doing a same kind of activity, that is imparting knowledge to students. That is education industry. Education. So either they can be industry level or trade level, buying and selling, or commerce, which supports industry and trade and business, like insurance, advertisement, transportation. Either I can be a private organization or a. And our size of operation can be micro, small or medium. I can be a domestic entity or a multinational company, or my area of operation can be just local business, only in Bangalore, or only in India, national or international. This is what is a broader perspective. The way of conducting business is very broad from the economic point of view. That is economic activity point of view. Second one, medium perspective. Difference between firm and individual, organization or unit is called as a group of firm with a dash activities industry. Now comes the important narrow perspective. Remember, Virat Kohli example. I am a cricket bat manufacturer. Whenever I produce a cricket bat, whenever a new strong bat comes up, I will call Virat Kohli and I will ask, there are super duper bat. He will come down and he will purchase some bat. This time, along with purchasing bat, he has given me some 20 free IPL tickets, especially for one important match, RCB versus CSK. Now Shashi Kiran is a one such person who don't like to go for stadium and waste the time, assumption. And I sold that tickets. I sold that. And I made a money out of it. So what is my business? Selling IPL tickets or selling cricket bat? Any income generated by selling cricket bat is my business income. That is my usual occupation. Selling cricket bat. Selling IPL ticket was my isolated transaction. Even though if such isolated transaction generates income, that is not a business income. Only because of usual income, if I generate a income, that is called as. This is what is narrow perspective. And in general sense, agriculture does not comprises industry. But there are 2 conditions. If the 2 conditions are satisfied, then it is called as agro-based industry. Which are those 2 conditions? Condition number 1, it should be the important raw material of agricultural output. Whatever raw material we use to produce tomato ketchup, what is the basic raw material? That is an important output of agriculture, and such output has to be processed, changing it from one form to. Only if both the conditions are satisfied, then we call it as which industry? But in general sense, is agriculture an industry? Definitely a no. Agriculture does not comprise as industry. Only if agricultural output is a key raw material ingredient, and if it is processed, then it is called as agro-based industry. So this is what business as an economic activity. Broader perspective, medium perspective and narrow perspective. Next comes distinct characteristics of business as an economic occupation. When we are conducting the business as a business owner, I cannot do it all alone. I also need various other set of people. Number 1, employees. Another, professionals. So these are the 2 kinds of support which I take. One is employment support, another one is professional support. If at all I have to appoint any person as an employee of my organization, the basic minimum requirement is, and next, the second question what I will ask is, do you have any prior work experience? If he doesn't have, if he is a fresher, then I will appoint him as a intern and appropriate training is provided. When I'm appointing you as an employee, that is nothing but contract between employer and you people will work in accordance to the terms of employment. For what purpose you have been appointed? What is your rules and regulation? And are you going to work for free of cost? Definitely no. Expectation of returns will be in terms of salary or wages. And would you like to be in the same position after 5 years? No. You would like to grow. That opportunity for career growth will be in terms of promotion available. Clear? And if you want to become an employee, do you need any business investment? You need not to invest anything. If there is a profit or loss, does it belongs to you? Definitely no. Business risk and investment is completely in which? Employment. So these are the characteristic features of employment. Next, second one is you people, CA, CS, law, doctor, lawyer, engineer, professionals. So you guys have got a prescribed qualification, not just minimum degree. It is a where you hold a certificate of issued by whom? Recognized institution, or also called as code of conduct. You are a chartered accountant, wherein you have a certificate of practice issued by ICA. You are a doctor, issued by, let me say, certificate of practice which is given by Indian Medical Council. Like this. You are a professional, you have got a prescribed qualification, you hold a certificate of practice issued by a code of conduct or a recognized institution. So you should have a prescribed qualification to be called as a professional. And whenever you are giving a professional service, you will expect a returns in terms of professional. That is not salary. When you are not keeping well, when you go and consult a doctor in his clinic, you don't pay salary to doctor, you pay fees to doctor. Same way for CA, CS. Clear? And your career growth will be in terms of, if more and more people are coming and approaching you and taking your services, that means you are becoming more popular, more and more people wants to take your services. Your client base is increasing. That means there is a career growth. And in order to set up your own office or your own clinic, you need a minimum. So minimum investment required, career growth will be in terms of client base, and rewards for livelihood will be in terms of professional fees. This is what is profession. Clear? Employment and profession. There is a difference between employment, profession and business given in ICA material. It is almost like a common sense and self-explanatory, which is commonly lacking with people like you and me. I know that. That's the reason ICA will ask the question from that area only. In order to start a business, do you need any minimum educational qualification? Nothing. Anyone can start the business. For becoming employee, minimum degree. Profession, prescribed qualification. Okay. Next, what is the expectation of return as an employee? Salary or wages? Profession, fees. Business, profits. Can you sell your business to someone? Definitely yes. You can sell it off. Profession, employment, risk and rewards. It is completely belonging to the business owner, whether it is a profit or loss. Profession, no risk and reward. Some minimum risk is there. In order to set up an office, you need to pay salary to your staff. Some minimum risk is there. But in employment, no risk at all. Like this, these are some chota mota differences which is given there. Kindly go through it like a newspaper once. It is almost easy. Clear? Next, point number 3. When we are starting a business, that means we are creating a job. We are not going in search of a. And we are also contributing for the GDP of a nation by producing goods and services in India. I am contributing to GDP of, that is momentum for economic growth. And we are investment intensive. To start a business, we need a investment. And there is a gestation period. That means in order to come out with something new, whatever time duration I have taken, for example, Fair and Lovely, from Fair and Lovely to Glow and Lovely, whatever the time taken to change or modify or innovate that product, that is called as gestation period. In business, there is a gestation period. You should always come out with something new. And in business, we can only calculate the risk. Yes, I know that my competitor is coming out with something new. I should also come out with something. But COVID was a surprise package for everyone. That is uncertainty. In business, we can never calculate uncertainty. We can only calculate the risk. Gestation period is development of something over a period of time. And my operation of business is always systematic and organized activity. So this is how I will run my business. Management will take the decision, that will pass on to managers, and then low level employees will work. And this is the flow in which I am operating. These are the rules and regulation which we have to follow in my organization. That is a systematic flow and an organized flow. Like what kind of goods has to be produced and in what quality, what all standards we need to bring into my products, what are our customer expectation. Without understanding these things, we can't create a system. We can't create a And last but not the least, what is it? Every business operates because of their objectives. They are object oriented. And what are the objectives of business? Three kinds of objective: economic objective, social objective, legal, ethical, and environmental objective. So what are those economic objective? Earning of adequate profit. I need to have let me say a good profit. Next, I need to add even more new customers. Along with, I need to optimally utilize the resources, sustainable development practices. And I should always come out with inventions. And so these are economic objective. Next, social objective, supply of good with society. Not the one which makes me profitable. Which society wants, we will do it. Next, avoiding of. We don't know what is that. We never do that. Next, production according to whichever goods nation is in need of, I am producing that, not the one which makes me profitable. Next, providing. Say because of me starting business, I'm providing employment opportunity in India. Because of me, unemployment rate is coming down. No objective. And not just providing employment. And also, if they're demanding for 20,000 salary, I will scold. Idiot fellow, do you know what is inflation in India? Take 30,000. Ash karo. Enjoy. Next, other benefits also, like free transportation facility, Wi-Fi facility, snacks facility at the evening, tea, coffee, everything. Next, development of. Not just employed, even he has to develop, even he has to learn some skills, even he has to grow in his career. All such are my objectives. Next, to regular end. We will pay next year tax 1 year in advance only. We Indians will never wait until the last day to pay light bill, current bill, water bill, school fees, nothing. We don't stand in a lane at all. We will pay very first day only. Next, to social. Not just conducting business for the sake of earning profit. We will also establish some business like schools and colleges where the intention is for a welfare of a society. We will establish some hospital, not with the intention of taking lakhs together for operations and all. For providing good health and care. That is what my objective. Social welfare is our objective. Not always profit oriented business. Something good to society also. Next, legal, ethical and environmental objective. Prevention of. We don't know what is pollution. We don't pollute at all. Air pollution, no way. Water pollution, chance illa. Noise, we don't even do any noise. Respecting the ethics and norms of. We created very much. 12 Hindu holidays. I will give. 1 Christian holiday. Definitely I will give. 1 Muslim festival holiday. Definitely I will give. National holidays. Total 14 holidays are there. National holidays according to calendar. I am equitably giving the holidays for every religion, every caste, every creed. See, we are good people. That is what everyone believes. That is what is the objective also. They say that I am going to, let me say, give fair chances to everyone without any discrimination between male and female, equal salary to everyone, equal kind of work. That is what they say objective. Next, ensuring balanced development of all region. If I establish 1 branch in city, I will establish some 5 branch in rural village. Balanced development. So you people, after becoming chartered accountant, don't open your office in cities. Already many of them are there. You go establish in your rural village. CA office there. Don't come to Bangalore. Regional development has to happen. Balanced development has to happen. So these are the objectives of business. Economic objective, social objective, and legal, ethical, and environmental objectives. Clear? This brings us to the last topic, that is a Bachu topic, Chota topic, which you have studied right from your 11th standard. Forms of business organization, sole proprietorship, HUF, partnership, LLP, company, and 1-person company. Those basic blood and butter for every commerce student. Here still many people does the mistake. Sole proprietorship, only one single individual. He is running the entire show. Registration is not mandatory. No specific act is applicable for sole proprietorship. There is a easy decision making. Faith of an organization depends upon the personal well-being of a owner. That means there is no perpetual succession. And owner is same, organization is also. There is no separate legal entity. Liabilities are unlimited. Next comes HU. Hindu Succession Act of 1956 will govern the HUF, and registration is not mandatory. HUF can never have a salary income, and HUF has a separate entity status under Income Tax Act. In order to create HUF, there has to be how many successive generation? Myself, my father, my grandfather, and Karta is a head of a family business, and his liabilities are, other members are called as co-partners, and their liabilities are. The definition of Hindu is also extended for Buddhist, Jain, Parsi, and Sikh. Only Hindu family can create an HUF business in India. The other remaining caste people can create partnership in India. But the Hindu Family Business Act applies only to Hindu families and only they can create HUF business in India. Next comes partnership. This is where major mistakes will be done. Partnership Act of 1932 is governing the partnership. In order to start the partnership, minimum 2 members should be there. Definition of partnership is the most important. That is where you people will go wrong. 2 or more partners coming together to carry out a business by all or any one of them acting for all to share the profits and losses in a agreed ratio. Partnership is carried out based on partnership deed. That is nothing but partnership agreement. It can be either oral or written. In order to start the partnership, there has to be minimum 2 partners according to Indian Partnership Act of 1932. But the maximum partners restriction is imposed in Companies Act, not in Partnership Act. According to the Companies Act of 1956, older one, 10 in case of banking, 20 in case of non-banking. According to the new Companies Act of 2013, 100 partners is what they have said. But company rules have now restricted it to 50. It is no more 100. So maximum restrictions of partners is imposed in Companies Act and registration is not mandatory. Liabilities of the partners are unlimited. The most important point, there is a mutual agency existing in traditional partnership. Every partner is an agent as well as to each other, or they are also an agent to another partner as well as a partnership firm. The mutual agency is existing in partnership firm. Every partner is binding with each other's decision, and any liability incurred by a other partner as an agent is a liability incurred by all the partners out of a good faith if the activity is done. This is what mutual agency. I know that Shatabdi Express is going on because these are the easiest topics which you have already studied in your 11th and 12th. Next comes LLP. LLP Act of 2008, not 9. LLP Act of 2008. But in BCK material also they have given this mistake. They have made it as 2009. But in law paper you have studied, it is LLP Act of 2008, wherein limited liability, as the name itself says, liabilities of the partners are limited, and LLP has got dash and dash. And perpetual succession. CCA has got dash and dash. Perpetual succession and common seal. Registration is mandatory. It is a combination of company and partnership where it will be administrated by Ministries of Corporate Affairs. Administrated by of Corporate Affairs. That I have not mentioned in this point. You have to write that down. It is administrated by Ministries of Corporate Affairs. Minimum partners 2. Maximum as of now not prescribed. Government can come out with any number in the future. Every partner is only an agent to the partnership firm, not for any other partner. So mutual agency does not exist. This is what is LLP. Next comes company. It is an artificial person created by law with separate legal entity. Perpetual succession and registration is mandatory. In the name of company, whichever has been registered or whichever has been established, they have to compulsorily register. It can be a dormant company, small company, shadow company, shame company, any company. Any name in the name of company has to compulsorily register themselves. Register. And there are 2 kinds of company, private and these are the differences. Already we have discussed this in detail many number of times. Clear? Any doubts with difference between private and public company? And remember, even a dormant company should also get register. What is dormant company? Which is established to just hold the future projects and intellectual properties. Last but not the least, 1 person. 3 differences. In case of sole proprietorship, registration not mandatory, but here mandatory. In sole proprietorship, liabilities are unlimited. Here it is limited to the extent of capital. In sole proprietorship, there is no perpetual succession, but here it is existing in the name of nominee. A nominee will be appointed for a 1-person company. In case of incapacity of the 1 person, nominee will take over the 1-person company. Nominee cannot be a person disqualified by law. Who are the persons disqualified by law? Minor, convict, unsound mind. See how much you people have revised law. An insolvent. That too, inky, pinky, ponky answers are coming. So this is what entire chapter 1 is all about. Clear? So last but not the least, chapter 2 of PCK, that is business environment. So business environment, now whatever we discussed in chapter 1, that is a continuation will happen in chapter 2. So when we are performing in a business activity, we operate in an environment. So such environment can be internal or So all those internal or external environment which will affect the performance of an organization in order to achieve their, that is called as business environment. So business environment is classified into how many kinds? Number one, internal. Number two, internal means within the organization. External means outside the organization. All those which are within the organization are controllable. We don't bother much about this, but we definitely bother for those which we are not able to control. They are external factors. Again, they are further subclassified into micro and under micro we have customers, competitors, suppliers, intermediaries, organization and market. Under macro we have demographic, political, legal, socio-cultural, economic, technological and global. So these are the elements which we will be discussing under micro and macro. For us in this entire chapter we are giving more and more focus on, because they are uncontrollable in nature. We will not bother much about internal because they are in our control. Clear? So what is business environment? All those internal and all those external factors which affects the performance of organization to achieve their. Now let us understand the characteristic features. Point number one, it is. So in order to understand every individual aspect and every individual element, say just customers, easy, just competitor, easy, just supplier, easy, legal, easy, social culture, easy, but analyzing everything and conducting the business as a whole, that is complex. That is complex. And moreover, they are also dynamic in nature. That means they keep on changing every now and then. They are not stagnant. That means even we need to keep on analyzing every now and then. And they are diversified in nature. Moreover, because of analyzing all these internal and external factors, we get to know where is my opportunity lying, where I should diversify my business, so that we can venture out into different kinds of a business for the successful growth of an organization and to achieve the goals. And moreover, last but not the least, new changes will always lead to. So because of COVID, all these Blaskell companies, many of them who didn't even knew about this product, they started producing mask manufacturing, sanitizer manufacturing, Adidas, Puma, Wildcraft. They were a bag manufacturer, sportswear manufacturer. They entered into mask because need of an hour, because new opportunity has been arised in the market. That has led to a new opportunity. So these are the characteristic features of business environment. Next one, importance of. Why should we analyze a business environment? Number one, in order to determine where exactly the opportunity lies for me and where exactly the threat lies for us. After knowing the opportunity, I will drive my organization in the direction of opportunity. Why? We have to grow the organization in the opportunity direction, and it is a continuous. As they are dynamic in nature, they keeps on changing. We should also continuously keep on learning, and that is an image building. Why am I doing all this, Angama? In order to get a goodwill of an organization, to have a good reputation of a organization in the eyes of a customers, and last but not the least, meeting competition through our own strategy. Clear? So these are the importance, and these four are the characteristic features of business environment. Whenever there is a changes in an environment, definitely there is a interrelationship between organization and. So it might be a competitors for others, but between us there will always be the exchange of. First we collect the data, and from the data we extract the information whichever is applicable to us, and according to that we operate in the environment. And not just exchange of information, we also exchange. Which are those five economic resources? Men, money, material, machinery, and. If a person holds a substantial power or an influence in an economy, like Baba Ramdev of Patanjali, because of his one name, Patanjali grows so big. If Baba was not there, definitely Patanjali would have taken some 13 to 15 or 20 years of time, like how Lever Ayush has taken. So because of one influential person being in the business, definitely they will take an advantage of their influence, and especially with the government control. That is what will happen. So these are relationship between organization and its environment. Exchange of information, exchange of resources, exchange of. Next comes organization response to its environment. That means, okay, we understood so much. Characteristics, importance, relation. Now, how do we respond to the changes in environment? Whenever environment changes, as an organization, we respond in three different ways. Number one, we will change the main important key task of an organization, like what are our plans, budget, policies, everything. If not, we will be collectively responding. As a competitor, we will come and merge together. Vodafone Idea, merge together to compete against Jio. So that is called as collective response, either by creating a joint venture or a, if not, competitive response. Whomever might come, whomever might leave. I am ready to compete and I am ready to make a profit in the competition. So these are the three kinds of response. By changing the main important task, administrative. By merging or by partnership or joint venture, collective. By competing, that is competitive response. So these are the three kinds of response. Next comes your most important topic and the case study, Cadbury case study. Whenever there is a problem in an environment because of my organizational goods and services, how are we going to influence them? Not just influencing, we should also survive in long run. We should also survive in, for that definitely we need to influence our customers and we should also adopt the changes. So a business should identify, appraise and also for its various opportunities. And so this is what Cadbury case study we discussed. Cadbury started facing problems, stated it contains worms inside the chocolate. Because of that, sales dropped. Quality of a product became questionable, especially goodwill got affected, that brand value got affected. But in reality, when they saw the check, the problem was not lying in external. Problem was not lying in internal. It was lying in all these retailers were not storing the chocolate in a prescribed condition. Because of a retailer's problem, goodwill of Cadbury is getting affected. So they started introducing new packing methodology by including that silver foil to pack the chocolate. Not just that, they introduced a cold storage at the point of sale. Even though if a customer is not purchasing my product once again, he can still see the changes, whatever we are making. So what is a conclusion? Any organization for it matter, the responsibility will not end once they sell the product. Their actual responsibility will start only after selling the product. So every organization should give importance for after sales services, and the most importance is for complaints. We should resolve such complaint through a complaint readdressal mechanism. If we don't give importance for complaint, definitely our organization will be pulled down in a near future. And not just that, when there is a problem, the very first people who will get to know about the problem are our employees, customer care executives. They should be morally high. They should know how to respond to the customers. If they don't respond properly, it is like adding more fuel to the fire. The employees of an organization should be morally high. Suppose if you are using Jio SIM card, if there is a problem in Jio network, will you call Mukesh Ambani or will you call customer care of Jio? So first people to know is employees. They are the license. So they will be the people who are the front facing to the customer. So they should respond properly. And whenever there is an issue, when you resolve it, come with a new varieties of product and come with a great ad campaign. That is what even Maggi did. From past 20-30 years, they were only selling plain Maggi. Once the problem occurred, Maggi contains lead chemical elements. Now they come out with all new products. Maggi, Hong Kong masala, Chinese soup, Japanese soup, Maggi, atta, everything. But from past 20 years, rascal fellow, you only sold plain Maggi. That is what? Come out with new varieties of product and come out with a great advertisement campaign. This is what every organization does when they face a problem. In short, they are going to influence their customer. They are going to, by adopting in order to survive in. Clear? Okay, sir, only when there is a problem, we have to do this analysis. No. Even though if there is no problem to your organization, you can predict the problems. You can. That is called as environment framework or organization framework. Even though if there is no problem existing, I am trying to identify those external factors which can affect the performance of a organization so that I can take a precautionary to overcome such. I know future is uncertain, but still I am trying to predict such changes, especially with dash factors. So one such organizational framework which I explained was Coca-Cola case study. Who is a major competitor? Pepsi, external, and he is a bad fellow to Coke. Not just Pepsi, even religious gurus, all those people, don't drink that chemical, go with local, made in India, local, herbal, ancient one, tender coconut. Next, health awareness, our doctors. You will listen to them only when you are not feeling well. After that, podate. Buy one, get one free. Wow, superb. Christmas is coming up. New Year is coming up. Now T20 World Cup is going on. Buy a bottle of Coke and there is a scratch card coupon in that. SMS to that. You will be the lucky winner. You can go and meet Virat Kohli in England, in Australia. XYZ. Our people are very super duper. So offers and promotion, schemes and promotion. That is where they are strong at. And it is internal and it is super duper good. That is positive. Even packaging. They include Chota Beam, Tom and Jerry. When small kid sees, I want that. Kinder Joy, one best example. Nothing is there inside it, but kids want to buy that. So packaging is super duper amazing, and we will make sure that if at all the customer buys 15 rupee that glass bottle, same 200 ml, they don't want to buy that. They want to look cool. For tin, same 200 ml, 35 rupees. For packaging, you pay extra. See, that is the strategy. Next, distribution network is amazing. We will only go in person. We will only distribute it to each and every shop. When Katrina Cafe is coming with a sliced bottle and when the mango droplets are falling, our people should feel like drinking one and they should go and inquire for a slice at shop. At that point of time, my product should be available. So like the distribution channel is very good. Next is seasonality. That is the biggest problem. I don't get a demand throughout the year. Only during summer we have a major demand. So what I will do, I will get tied up with PVR, Inox, McDonald's, Cafe Coffee Day. I will get at least some minimum orders. And next, natural fruit juices, the local juice shops, where you go, you order, you will put in the grinder in front of you, you will prepare the juice and you will give. They are also competitors. How do I tackle offers and promotions? Buy one, get one free. Meet a chance to meet Sunny Leon, Virat Kohli, all such things. So we people are very super duper expert in this. Next, why we need to analyze the environment? It can be the Cadbury case study or a Coca-Cola case study. Why? What is the main important sole purposes? Why we need to analyze things? Simple. In order to understand the current. Only if I know the current position, then only I can plan for the future benefit, or to understand the existing environment. Why you need to understand the existing environment? Because boss, I need to come out with my own fresh viewpoint to achieve the organizational. For that, first I will collect the data. From the data, I will use the information in order to achieve our decisions. So because of the decision, I will come out with a fresh viewpoint to achieve our goals. This is the reason why environment scanning is required. Clear? So these are the three concepts which is important and most the twister in the exam. Environment influence on business, organization framework, and why environment analysis. So what do you mean by business environment? All those internal and all those. But now kahani mein twisters, environment scanning. Business environment analyzed all the internal and all the. But here we are going to analyze only and only whichever is applicable to our business in order to identify our opportunities and threat. I will not analyze all internal and all external. We only analyze or monitor the relevant environment to identify which are the opportunities to my organization and threat to my organization, so that I can come out with my own strategic decision. Simple. To know the opportunities and minimize the threat. If it is a threat to one organization, it is an opportunity to. So it is the process of gathering what? Information. Information is important, not just data. It is a process of gathering information about the companies. That is what I said, relevant environment. Why? It helps in deciding the future path of organization. So under environment scanning, there are four important elements. Which are those four important elements? Events, trends, issues. If you remember, I gave the torn jeans example. There is a textile event. In the textile event, one of the cloth became a trend, torn jeans. Now because of event, that became a trend. Now because of event and trend, there is a problem, sir. What? Your mom is taking broomstick whenever you are wearing torn jeans. Why are you wearing cloth like a beggar? Next, I am expecting a solution. Who are the expecting people? All those interest groups. They are expecting a solution for the issue. So event will take place either in internal to the organization or external to the organization. Because of event, there is a trend that has been created. That is a pattern of change in a particular area. Because of event and trend, there is a current concerns that has been raised. And because of issue, we are expecting a solution. That is a demand created by interest groups for the problems. Clear? So this is what is environment scanning. Now let us understand the elements of macro and micro environment. Especially our main area of focus is external environment. Clear? So under micro environment, we have customers, competitors, intermediary, suppliers, organization, and market. See there, before starting any business organization, we need to analyze and in detail know about these factors. Number one, customers. We need to always add even more new customers along with the existing one. My customer may not be the consumer sometime. You will ask your parents to get ice cream. They are customers. You are consumer. And for me, that consumer's taste and preference is important. Why are they buying my product? Are they liking the taste? Are they preferring only me? And even my customers' buying pattern and spending nature is important. How often are they ready to buy? How much money are they ready to spend on my commodity? And there are two types of customers. Number one, affiliate customers. For them, quality matters. Whatever might be the cost, it doesn't matter. For me, good quality is required. Second one, typical Indians. First we see price tag, then we decide to buy or not. For us, dash matters, cost matters. Second one, Like me, even my competitor wants to become number one. Even he uses the same resources. Even he wants the same customer. So he is the one who is fighting also for market share and resources. And because of competitors, our cost and quality will get affected. Even we need to reduce our cost. We need to improve our quality. And competition exists only in oligopoly and monopoly. In reality, perfect competition does not exist. Myth. Monopoly, single seller, no competition. Oligopoly and monopolistic competition is the only place competition exists. And they always try to attract customers through their marketing strategy like free home delivery, buy one get one free, gifts so complimentary, Diwali bumper sale, big billion day, Amazon festival sale, all such things. Next, third one is we should always get the raw materials on time for a good quality at a lesser price. Then only we can meet the demand on time. Suppose if whatever we are getting, the cost of producing is going high. Why? Because raw material cost is high. Suppliers will always affect on cost of production as well as profitability. That means they have to supply the inputs, that is raw materials, at a dash price and with a standard quality so that the firm can sell it. And not just that, they should be supplying without any delay and without any kind of disturbances, and they have to supply regularly on time. Then only we can meet the demand. So these are the elements of supplier. If this is available in India, if suppliers are effective, if raw materials are available on time, good quality, lesser price, then produce in India. If not, don't enter India. You cannot compete. Next, intermediaries, all those wholesalers, retailers, agent. These are the people who will reach your commodity from place of production to place of. If retailers are more, if more and more intermediaries are involved, selling price will be more. If there are less intermediaries involved, selling price will be. Organization, that means board of directors, shareholders, and even they come from the same society. They are also part of the same society. Your employees, your board of directors, your shareholders, even I need to understand their customs, beliefs, practices, norms, what is their mindset, then only I can operate. Last but not the least, this is not about monopoly, oligopoly. How is the market? Is it matured or not? Is this market able to perform or not? What kind of technology is there? How many times the prices will change in this market? And what is the cost structure in this market? Is this market able to grow even more or not? Is it matured or not? What is the existing distribution system of the market? All these things has to be analyzed even before entering. What is the potential size of a market? At present, what is the actual market size? All these things we have to understand, and then only we have to enter. If not, and even in business. Clear? So these are the micro factors. These are the dash factors. Micro environment. Now let us enter into macro environment. Demographic, that is study about the population. What is the size of the population in the country and what is their financial status? Can they buy my product or not? How many people are living in city and how many people are living in rural? What is the availability of labor supply? Are they skilled, unskilled? How is their educational purposes and how are they educated or not? Do they have a technical training or not? What kind of ethnical background they come from? What religion are they? What are the customs, traditions, practices they follow? All these things I need to understand. If I come to Middle East country and I will say I will give half day on Saturday, they will say get lost. That is in India. In Middle East, Friday we go for prayers. Friday is half day. Clear? So that is how they will operate. I need to understand their ethnic mix. If not, it is highly impossible. When I spoke about ethnic mix, that is also interconnected with socio. That is, in short, how as an individual and organization we are interconnected with each other through beliefs, standards, custom, practices, and which is going to take place in a business environment. And next comes our thumbs up people. A better. Not all, many of them. So they are the interest groups who hold a power, who always keeps on changing, and that will always affect on taxes, rules, and regulation. When those things changes, definitely the way of operating business will change. In short, politics is nothing but government attitude towards, which will affect in the name of trade restrictions. If political instability is there, if political decisions are not proper in the country, what will you do by establishing your business? You can't perform well. So I should also analyze that. Next also comes with legal. Whether I like it or whether I don't like it, I should definitely follow. Every nation will have a sound legal system which protects three kind of people. Number one, customers. Number two, competitors. Number three. So whether I like it or don't like it, definitely I should follow. That will affect the way the business are operated. Next comes the most important of all, economic factors. Which kind of economic system is this nation following? Capitalistic, socialistic, or mixed? What are the economic resources availability? That is 5M. Men, money, material, machinery, and is it available in abundance or is there a shortage, or is it in an effective manner or not? And what are their economic policies with respect to industrial policy, monetary policies of RBI, How stringent are they? How strict are they? What is their foreign investment rules and regulation, FDI and FII? And what is their export import policies? All those FEMA comes into picture, exchange rate comes into picture. We need to understand not just that. What is their economic condition? Is it a developed country or developing nation like India? Azadi ka Amrut Mahotsav. From 75 years, we are developing. See, great experience. We can teach other countries also how to develop. Next, like what are the other factors, like what is the demand generating capacity, what is their supply, inflation, cost of living and exchange rates. We should analyze this and then only we can enter the nation. If not, you are monkey and your friend is Winky. Next, point number 6, technology. In today's world, technology and business both are highly interdependent with each other. Without technology, we can't perform the business. Say, technology acts as both advantage as well as. Best example, why WhatsApp blue tick. That blue tick is the biggest problem now. Even after reading message, rascal fellow didn't reply. Earlier, people never used to know that whether he has read the message or not. You turn off, I will turn off. We can't see others blue tick. Advantage as well as. That is what. Next, it reduces the paperwork. The way people are communicating has been changed. Now you will pick up the phone. If you want to speak, call. If you want to see him, video call. But earlier we don't have an option. Letter, 3 days to reach, 3 days for reply. See, that is what. Next, last but not the least, global factor. Because of globalization, now entire globe has been treated as one single market. So due to the global reforms, there is no more political boundary. Firms can expand. They can create market in anywhere, nook and corner of the globe. And now all global events. Best example, World Cup is going on. Entire world is watching. FIFA World Cup is going on. Next Great World Cup is going on. All global events, even pandemic, global event, COVID. All global events will affect the way business are performed. So these are the internal and external, especially micro and macro factors. Next comes PESTLE analysis. What is the acronym of PESTLE? Economic, socio-cultural, technological, legal. Did we study about them? Just now we studied macro factors. Only left out is. So what is PESTLE analysis? In short, it is an external, especially macro environment analysis, which will focus on 3 important things. Which will focus on number 1, future profitability of events. Number 2, competition analysis. Number 3, risk associated in market. Okay, you analyzed about these 3 things. What is the outcome of it? My outcome is about marketing and strategic management. And in short, my analysis is to take care about my own strategies. What all factors are affecting, especially these macro factors are more important. That will affect the performance. And it is uncontrollable in nature. What is it? And how is this environment is getting to influence now? We are using lot many resources from environment. We should also use them in an effective manner. We should also preserve them for the future purposes. That is what a sustainable development practices. We need to follow that. So by following a sustainable development practices, if I do so, even others will follow the same. It creates a new market and it destroys the existing market. Best example was CSR activity, corporate social responsibility. What these companies are doing, not out of their good wish. Government has made it mandatory. 1% profit has to be used for CSR. So they have become so good people to society. If not, nothing they will do like that. Clear? This is what is PESTLE. And next comes your favorite one. What is that? Strength, weakness, opportunities and. Now PESTLE was only and only external analysis. But SWOT is both internal and. Strength and weaknesses, internal opportunities and threats. That is, an organization is analyzing about themselves. What are their strength? What are their weakness? What is their opportunity? What is their? Suppose if they have strength, what should we do? We should do more and more of strength. That means we will build more and more of strength. If we have a weakness, we need to. If we have opportunity, we should invest or. If we have a threat, we should neutralize or. What is strength? Strength is a inherent capacity. What is weakness? Within ourselves, what are the limitation? What is opportunity? It is an external favorable condition. What is threat? It is an outside external unfavorable. Suppose if at all we have a strength and we have an opportunity both, we should be more aggressive and we should take advantage. If we have weakness internal and threat external, situations to avoid. No, don't want. Suppose if there is a weakness, we try to convert weakness into threats into. That's it. This is what SWOT analysis. We are analyzing about ourself of internal and external analysis. Analyzing self and about competitors to come out with our own strategy. We convert weakness into threats into. If we have strength in internal and opportunity in external, go aggressive and take decision. If we have weakness in internal and threat in external, these are the situations too. This brings us to the last topic of the entire BCK discussion, that is strategic response to. Just few minutes ago, we just discussed about organization response to environment, administrative response, collective response, competitive response. Over there, strategy was not involved, but here, strategies are involved. See there, first one, least resistance. As the name itself saying, I am least bothered, like BSNL. Let tsunami come, let COVID come, let volcano come. I am like this only. I am just for the name's sake, I am surviving in the market to achieve my goals. That is called as least resistance. Second one, proceed with. What is this? We will create a new strategy, and definitely we will also change when environment changes. But I will stick into that strategy. If environment changes 10 times, I will not change 10 times. I will change only once, and I will stick into that strategy in order to survive and strengthen in the economy. Last but not the least, as the name itself is saying, dynamic. Even if environment changes 10 times, I will also change 10 times. First only we will create some 10-20 strategy and keep it ready. Whichever is adaptable to the changes in environment, we will adopt and we will change. So we will create alternative course of action and we will select depending upon the. So we will identify our threats and weakness and convert them into. We are completely manageable and controllable in action. These are the three kinds of strategic response to the environment. Clear? By this, even chapter 2 comes to an. Chapter 3, I have instructed you how to prepare the chart about all the organization. It can be an Indian company or a global company. You have to prepare these two charts. Chart number 1 includes these many elements. You have to prepare and stick it on the wall. You have to observe that. By hearting will never help. From chart number 1, 2 questions will compulsorily come. And chart number 2 is like a self notes. These are the elements that has to come in chart number 2. And it is like a self notes pointer wise you have to prepare it. Have you guys prepared? So before preparing it, I even instructed you, kindly solve MCQs. Kindly solve. You will get an idea what all kind of questions will be asked. So most of the question has come from chart number 1, comparatively from chart number 2. So 2 to 4 marks is what we can expect from this chapter. And it is like a bonus factor if you can able to learn this. Clear? So this is what chapter 3 was all about. These are the 2 things that you have to prepare and stick it on the wall. Clear? Understood? By this, the entire revision comes to an